See you guys. It is Tuesday night, April 11th, 2023. This is Red Ben, and Ronan the cat will probably say hello too, most likely. He's pretty noisy. But you can get a hold of me if you're not already following me on Twitter. It's at RedBenTrader. And then if you want to learn more about the algo that I'm using to analyze the market and find setups, you can talk to my coach, Simon. You can reach him at trade_wordperform@gmail.com. He did tell me last weekend that we are accepting new members. I probably only a few for the month, especially since it's been a little bit like there's kind of been a bit of a shift in the market price actions. So it's important to Simon that like bringing on new members doesn't interfere with existing members continuing to perform well. So yeah, he's pretty slow about adding any new people. It's a small group. We do only trade futures, and yeah, you can just email him if you want more information. That's as much like marketing or anything I'll be doing today. Hi, Kat. So, all right. So I wanted to cover a few things today, based on some research that I'm doing. Like I mentioned, it's become very clear that the sweeping, like, or trending markets that we were doing really well with in February and March have shifted quite a bit to become a lot more almost like summer trading, very slow, very choppy, very trappy, with just a lot of noise. And the trouble with this is that if you use a technique that's very aggressive, you're going to end up taking a lot more stops than you're used to. And normally it's fine to take a couple stops because you can just continue to run your program, and eventually since the market's moving, you can make up the stops with one or two good trades. The problem with this current price action is that in addition to having lots of choppiness and lots of trappiness and all that, which like I said isn't all that unusual, but the real problem isn't so much that. It's that when it does get going, it's not necessarily setting up because it's not moving much until it's ready to go. And then in addition, if it does set you up, there's a higher likelihood that it just runs into resistance and mean reverts. So the result is if you were, for instance, on NQ, in, I mean, for a long time, I can be pretty confident that every rotation is going to give me an average of like 10 to 12 points or more, as long as I'm getting in within 20 points of the low, let's say, on a rotation. So on a regular, like a time frame I actually trade, right? I'm like, this is actually the 80 tick chart. So this is not something I trade, but we're going to talk about that in a minute. But if you just look at like where the market goes on each little rotation, even on a very small time frame, it's usually at least 30 points, maybe 32 points. If you look at the voodoo range, it's normally up in the 50s and 60s, right? That's pretty normal if anyone's been following that, which is basically it's a way to measure what a natural expected rotation is. Right now it's at 59 and a half on NQ. So that's it's like I said, 60 would be pretty much as tight as it gets, and it's actually lower than that on ES. Normally if I have a 5-point stop, I can at least achieve 5 to 10 points on a regular basis, and the voodoo range is usually somewhere around 15 points or so. Well, now it's 10 and a half. So if you think about what that really means when it comes to like natural rotations, is that here, I'll show you this. I think this might make sense. So let's look at ES, because I think ES is just a little bit easier because there's less rotation. This is real obvious. So each one of these lines, I don't want to get under too much of a tangent, but I think this is an important point. Each one of these lines is the voodoo range level, right? And the idea of the voodoo range, which was valid as of Sunday night here and then all week, it's the expectation of like the areas that the market is kind of naturally programmed, if you will, to reach for. And it doesn't necessarily mean they're going to act as brick walls and reject there, but it would be unusual for it to move less than whatever that range is. So here, like I said, each one of these is 10 and a half points away. So when we get moves from one to the next, you'll usually get a pullback into the voodoo range level, and then an extension of it around 10 and a half points, and then if it's going to reverse, it'll go back the other way, right? Whereas here, if it comes up, it doesn't quite reach it, chances are after this move, you're probably headed to the lower voodoo range level at the below here, and then you might get something like this, right, to this one. Now, if there's momentum, you can go maybe three voodoo range levels or more without having to really turn around. That's pretty normal. But then the important thing to see is that on natural rotation, it usually comes back, checks in on that 10 and a half point, and then checks in on this 10 and a half point before continuing, right? That's this little move right here is like that's like the money, right? Like that's where you need to have a way to get in here, in my opinion. And you don't need to know exactly what this low is, but you better have a pretty good idea of what's expected. If you're going to trade and expect to get some of these swings, you better know what this normal pullback is. And like I said, normally it's higher than 10 points. It's maybe 15 points. And right now it's 10 and a half points. And you can see when it's choppy, it can sometimes just stay right inside the voodoo range level, or maybe expand out of it slowly, right? Or else it can just actually get stuck there. And this is an extremely tight range, right? This is going from, this is only a 4-point range we've been trading in Asia here, waiting for CPI. So it's just gotten, you can't, trading this is not worth it with a 5-point stop. Hopefully that's very clear. Trading with, if you have a 4-point range, putting a 5-point stop below your entry and hoping to make you money over time is not going to work, right? Well, even if you move 10 points on a regular basis, 10 and a half points in each one of these, if you need a 5-point stop, that 10-point range will only make you money consistently if you can get in at the apex, that's pretty rare, right? Usually you'd need to know or have evidence, I should say. No one really knows, right? But have evidence that it's going in a certain direction. So perhaps like after this pullback and then the break beyond that, or maybe the close beyond that here, you might know or be confident that it's probably going to head to the next voodoo range level or lower. So I might get in if I had a signal at like 41.31, right? And my stop naturally needs to go back up here somewhere, right? At like 36, let's say, 37, something like that. And then my expectancy would need to be 5 points. Well, in this case, like I said, at 31, the next voodoo range level is 26. So it can give you 1-to-1, and sometimes it's going to give you more, but realize that like anything less than that is completely untradeable. So if you have that in mind of like, okay, I can make money every time it does this, but it only does this twice a day. Like, look, that's the open on Monday, right? Other than that, you had one opportunity here to get a swing that was bigger than a voodoo range level, right? And then this one, you might have been able to catch this, but it really didn't set up very well. And then it went to the next one and then just flatlined, right? So if you missed this because it's the open or pre-market, and then maybe you caught this one and then missed this one, you got one opportunity really to make money. And so if you took any stops in the day, your chance of being break even or better would depend on where you caught this and how long you held it, right? Well, look at today. Today was even harder, in my opinion. Today, you had the pre-market econ, right? And then we had the open here. And then we had econ come out at 10 o'clock Eastern, right? And so some choppiness here. I took stops there, and I think a lot of people did, right? So let's say you started out the day aggressive in either direction. Chances are you probably took at least one stop, right? And that's normal. That's the price you pay for being aggressive when it's choppy, right? Your opportunity then to make that stop back and to get back to break even was like right here on this pullback at 11:30, and then you had one more opportunity if you were very, very, very like targeted. You might have caught this wick here, but look at the expectancy. It didn't even like, okay, let's say you got in after this broke out, right? You wanted to be sure, and so you wait for 45, right? 41, 45. Your best MFE is 51. So like I said, you have to, if you're going to trade when it does this, your win rate better be really strong, because if your best case scenario conservative trade is giving you 6 points here for the conservative trade, if you didn't try to catch the if you didn't try to catch the dip and you waited for the breakout, which a lot of people do, if you took if you put your stop 5 points below that, your MFE was 6 points. And so I'm just saying, like, doing that over and over and over again, you better have a pretty good win rate with those breakout trades. Otherwise, it might not make sense to take them in this environment, right? So, and that's something that I'm learning. Whereas if you go back to March, now the voodoo range will be different, right? So we can just turn that off, because this will be useless in the past. Like even like here, right? Like March. End of March, from day to day, even in ES, you had multiple rotations that were 10 points, let's say. And so you catch any of those correctly, and you could be up on the day. And then if you caught the last one that just went straight up, that's just frosting on the cake, right? And then here, I mean, look at this, huge opportunities in each one of these wicks and candles to make money, even if you just like stood pat all day, right? That looks like a Fed day, yeah. So even if you skipped Fed day, let's say you did this one, well, you had to trade the open to catch that. That day honestly does look pretty tough. But here we go. This is good. So look at all these chances you had, right? plenty of movement and opportunities. You could also get stopped, but plenty of opportunities if you had the direction right to make this swing work, right? And if you got it, let's say you took 3 stops, right? You took a stop, you got a 5-point win, you took a stop, you get a 40-point win. You're fine, right? No big deal. You're winning trader. And so what I'm basically trying to say is that you didn't, when things are moving around, you get rewarded for aggression, right? You get rewarded for aggression. When we have markets where I have to go to an 80 tick chart to be able to figure out which way it's going, because if I try to do that on a 24 tick chart like this, it might not be perfectly clear if this is bullish or bearish. Like, is it trending up? Is it trending down? Like, what is it trying to do? Is not very clear here, right? And so whereas, like I said, if I pulled up March 23rd or whatever, it would look a lot more like this, right? Where you have plenty of movement on the 24 tick, it would look like this. So how do you deal with that, right? So we know what the problem is, and we know why you might not want to be super aggressive in markets like this. So how do you solve that problem? So the number one thing, the most obvious thing I should say you can do, is you can go to a smaller time frame, because things are moving shorter, or things are moving faster. So you can process. Since things are moving slower and they're not moving as far, these bars take longer to print, right? They won't close. And remember, the way they work is the signals are only valid once the bar closes, and once they're there, then you know they'll stay there, and they'll stay valid. But if it's going a mile a minute, well, you're not going to be able to react to that in time. So it's kind of useless to look at a smaller time frame. Well, when it's this slow and this tight, you can easily trade the 15 tick. In fact, you might even be able to trade like the 8 tick on NQ. I'm not saying you should. I'm just saying, like, if the problem was that you couldn't before in March, the reason why you wouldn't be able to go under a 24 tick is because things like even the 24 tick was like printing bars so quickly that it was hard to like process what's happening and what you should be doing, what you should be looking for. Now you can pretty much, if you could do it on the 24 tick in March, you can do it on the 15 tick now. In fact, I think it's slower on the 15 tick now than it was in the 24 tick in March. So that's not a problem. And that solution, the other benefit of that solution is that your stops with the exact same setups, the stops are smaller, because the way our setups work, all of them, is if we're going to take a long, let's say, like here, our stop goes below like the bar's low, either this bar or this bar, depending on the setup. So in these cases, you'd be getting in when the pink bar closes, let's say, and so that'd be like a 98 entry, and your stop, your aggressive stop is like 92, let's say, so 6 points, and your conservative stop, even if you wanted to be absolutely, like, you really thought this might need a little bit of work, but you just wanted to give it plenty of room, we're looking at like 84, let's say, to be, so 84 to 98, right? So you're still not even looking at 20 points, right? And that's something you can't achieve on the 24 tick. On the 24 tick, these bars are bigger, generally. So on the 24 tick here, you wouldn't have your pink triangle up until here, if that was your entry signal. So that occurs at 1307, significantly higher than this one, right? So you didn't get the signal until later. And then your stops would go at like 99, and this one is at 95, let's say. So you're looking for the deeper one, you might have a 22 point stop, and that's pretty normal for the 2 bar stops. 22 points is about right if you want to wait for that triangle and you want to have a conservative stop underneath this low, like I said, that's not always the right decision. But if there's a reason why you really thought this was going to push, and you want to give it plenty of time, plenty of space to like breathe, that 22-point stop that's pretty much what you're going to get on the 24 tick. That same exact setup can be had for like, let's say 15 points on the 15 tick. So there's definitely benefits to using a smaller time frame. The drawback is that there's also more noise because it doesn't take very much movement to print to print a bar. It means that the requirements for, like, a lot of these signals, remember, are, the way they work is they're looking at the footprint and it's comparing information from one time or one bar to other bars, or maybe the average, or the whatever, right? Like it's taking time frame or size of the bar into account, and you can find like this triangle here has the same requirements as this triangle here, right? So when you're looking at information on this time frame, that condition is met here, whereas on this time frame you really don't know that condition is met until here, because for that triangle to print, it's always, well, I shouldn't say always, it normally requires that that the close before it was going in the same direction, right? You really shouldn't be seeing triangles on bars where the bar before it went the opposite direction. There's more to it than that, but I'm just saying that that's just, when it comes to where they show up, they're not supposed to show up here where you go up and then down. They're supposed to show up here when the previous bar was going in the same direction, right? So you need other conditions to also be true, because I mean, you can see these all went in the same direction. You don't have triangles on all of them, but I'm just saying that you won't find it. If this bar is an up bar, this bar won't be a down triangle. If this bar was a down bar, this bar won't be an up triangle, right? So if your entry's on triangles, you're always going to have this bigger stop. But the question is does it have to be 22 points, or can it be 15 points, right? So if you trade the smaller time frame, which I've been learning to do because it's really slow and, like I said, all these benefits to it. What I'm finding is the drawback is that, like I said, there's a lot of noise, and you could produce this signal despite the fact that the higher time frame looks extremely bearish, right? It's not taking into account a lot of the time. A lot of these signals are time frame specific. Not all of them, but many of them. So as a result, you need if you're going to use multiple time frames, which I prefer to do, you need a way to filter out some of the noisy entries and hone in on the entries that give you what you actually are looking for. And one relatively simple way to do that is to try to trade in the direction that the higher time frames are signaling. Now, a lot of people aren't thrilled with that solution, because that means that you won't be getting the reversals, right? The big trend reversals, the tops and the bottoms, occur when the higher time frame disagrees, right? That's just the nature of the big tops and bottoms. But what I'm finding is that I don't need the top and the bottom to make money. What I need in this environment in particular, yes, I know, Owen. Now you want to play. Maybe I can play with you and talk at the same time here, because otherwise he's just going to keep going. He's a needy kitten. So, yeah, try not to get too distracted here. But what was I saying? With the time frames, when the time frames are in agreement, while you might not catch the turn on the higher time frame, the more consistent entry that I'm finding are the ones that come up in the direction of the higher time frame, um, when the smaller time frame that you're wanting to be trading is shifting to align with that time frame. So a very good example of this that everyone's familiar with already is during the like the biggest bull market in history in like 2017 through 2019, and as well as most of 2020 as well. When the higher time frame is bullish, generally, like when I'm saying, I'm talking about like swing traders here. So let's say like the monthly chart, the weekly chart. When those charts were bullish, and they were bullish for a long time, pretty much any weekly dip could be bought, and a new high on the weekly chart would eventually be reached, basically with one exception of the very top. You'd obviously miss that and take a stop there, and then occasionally, you, depending on where you put your stop, you might need to collect liquidity, which might result in stop. Even if you bought, quote unquote, bought the dip, you might end up getting stopped out as they sweep up liquidity, and then only then to race to your target. Right? Everyone's experienced that as well. So, but I think everyone can also understand and agree that when the higher time frame direction is very clear, and not really contested much, that while the smaller time frame will set up in both directions, the more reliable entry will be when the smaller time frame was unaligned to the higher time frame, and now it is aligned. So it'll look like a reversal on the smaller time frame. The setup will be a reversal setup, but the direction will be in the direction that you want, that you expect that the higher time frame is going, if that makes sense. So I don't want people to think that I'm saying you can't trade reversals. You can. You just need to know, first of all, where your support and resistance is on the higher time frame, because those levels, especially when it's low volume like this, those levels are gonna be really, really solid most of the time. You might be able to trade over them, but you won't put any volume over them, and you'll get a lot of failed breakouts. So knowing, for instance, not to short into resistance, for instance, is a. I guess you don't really worry about that with reversals, but sometimes you do. If you break under support, let's say you're looking long, right, and you know the higher time frame is bullish, but there's this support that's on the higher time frame. If you break under that support, you could get, the algo could set up on the smaller time frame for a bullish reversal. It could look like it's going higher, but if you know that old support is right above you, you need to ignore that entry. And that's, like I said, that's something that when there's enough volume, it might not matter that much, because a lot of times you'll just rip right through it and continue on with the trend, right? But when there's low volume and the price action is choppy like it is now, those traps are super common. So like that area, even though it's very, very important to the higher time frame, because there's not a lot of higher time frame traders active, it becomes kind of porous for a little while with low liquidity, until suddenly somebody big comes in and smashes it. So what it ends up looking like is a lot of failed recoveries, right? So like I said, you'll have failed breakouts, and so momentum trades don't work very well. And if I didn't say that, I should have. But particularly against the trend. So if I may not have said this. So if you, but maybe I implied it. If you know the higher time frame's bearish, let's say, and you try to take breakouts to the upside on a smaller time frame, first of all, we should know that breakout trades and momentum trades in general have a much lower win rate than mean reversion trades. That's just a fact of life. And the that's just the way markets work. They tend to keep doing what they're doing, but you're going to be wrong a lot. It often needs to try more than once before it breaks through those resistances. So even in a very bullish market, for instance, you might only get 35% of your breakouts to hold, but the reason why like trend trading works, and which is basically the same thing as momentum trading, is, and this is true on all time frames, is because once you do get it, that breakout can result in a 2, 3, 4, 5 R like a trade result, as long as you can hold it. So if you're good at identifying when something is, if you have a method, I should say, of identifying when something is like failing and when it's succeeding, which, and there's a lot of ways to do this with like volume analysis and stuff like that. The algo does it for me, thankfully, but I can do it from the I can, you can see it on the footprint, right? And if you watch the footprint, you'll know, if you know what to look for. But I'm already telling the algo to read the footprint for me, so it's just going to signal me with like different dots and colors and stuff like that and tell me this is a failed breakout and you don't want to be part of it anymore. But if you're really good at determining when those breakouts are working and when they're not, what's even more important than that, because even if you're good, you're only going to get, let's say, maybe tops a 40% win rate on those breakout trades, just naturally, your win rate's going to go way lower if you're trading against the higher time frame trend. If you think about it, we see this in higher time frames all the time. If you have a bullish market like we had in, let's say, 2017, right, and you saw a down day followed by another down day, on the smallest time frames, the 15-minute, the 30-minute, those look like momentum trades to the downside, right? You would, and some of them worked, but did 40% of those work? No, not even close, right? You maybe got 3 of those to work, and that was like it for the month, you know? Now, keep in mind, we're day trading, so I'm not as concerned about what the weekly, month, and monthly are doing like right now for my like trade direction, but for sure, if it, once it gets unidirectional, you just can't momentum trade to the opposite direction of the higher time frame trend. So if I'm trading, let's say, the 15 tick chart, right, and like I said, my entry might be 15 points from my stop, let's say, would be pretty normal. It's not going to matter if the day is if the daily chart is bullish or bearish, or even if the day is going to close green or red. It's not going to matter. But what is going to matter is at this moment, when the setup shows up, what is going to matter is on my higher time frame charts, what I consider a higher time frame, for instance, the 80 tick. So each one of these bars now, it's the same exact signals, but each one of the bars now require 80 ticks to print. So it's still the same patterns, but it just takes a whole lot longer and a whole lot more movement to be able to print this. And what you'll see is that on this time frame, it's very clearly bearish here, right? And then when you zoom out, you'll see that we're at a key location with volume below us, which is this green, and a higher low here. See that? So we have a key location being tested, right? But we're counter trend. Okay? So if we continued lower at this in this situation, and then attacked this white level from back here, from below, and peaked above it a little bit, right? If that happened like right here, like see how it's going to go down, and then if it peaked back up above there, like this, generally, this should not be trusted as a breakout. I'm not saying it's not going to work. In fact, this time I think it does. But generally, trading this way is going to get you in trouble. If you see this and you have a support level, and you believe that you've given up that support level, you've developed volume below it, and they come back in and peak above it, immediately longing there because you're afraid, you're like, basically it's FOMO, you're afraid you're going to miss the breakout. Sometimes it will develop into an awesome trade, right? But usually you're going to get a pullback into the level first, like this, that holds anyway. So what I'm saying is, on a tiny little time frame compared to that, you don't want, oh, I can't see, here, let me show you where that level is. Okay, so this white level is our, hi cat, this white level is our key location, right? And you don't want, so we give it up. I know it's like hard to read because there's so many signals because we're so zoomed out, but it just, bear with me here. You give it up, right? It looks bearish. Then we come back in and peak above it. This is not the location to be bullish, in my opinion. This is not a great place to start getting aggressive because the higher time frame is bearish. What you'll end up doing is getting stopped out only to see your target hit, right? So these were causing me a lot of problems because it looked bullish on this time frame. I got to push over what I thought was a very important level. I'm getting my triangle up. I've got my dot. Everything looks good. I get in. I put my stop 22 points below. It takes me out and goes to my target. I'm like, what the hell, right? Because if the higher time frame is bullish, that's not going to happen very often. It'll happen at support, but it won't happen during momentum like this. The better place to get long, if you insist on going long, or if you really think there's a reason to get long, is also usually not here. See how we're pulling back and we're here. So we're pulling back and we're making higher highs, but we haven't come back. We have not come back to test this key location, right? That, remember, we gave it away, right? Bulls gave this away. It was clearly bearish down here. And then they recovered it right here, right? You want to wait until they actually trade down there. Sometimes that means you're going to miss it, right? But what you really want is for them to establish down here and clearly reject it and then break a high up here. So they try to trade under it, immediately reject it, right? This would be your very, very aggressive entry, would be right here on that triangle up. Very aggressive. Better is wait until they break over one of these resistances. Now there's momentum. Okay, so if we could break over this in particular, that high right here, and make a supernova, which is what we call it, you can get over that. Now, here, you can start trading momentum, in my opinion, up to whatever your target is. And if you're already within 5 points of your target, there's no trade, right? But if you have a reason to think that you're going to come up here for some reason, then like buying aggressively here, the dots, the green bars, the stars, the triangles, just like what basically looks like chasing, right? This is the only place that's going to work. Now, the good news is like I said, when you get it right, all of the entries work. No, I shouldn't say all of them, but because that's not totally true. The vast majority of the aggressive trade signals here to the upside are going to lead to up, right? Even though you're trading counter trend, but knowing compared to the higher time frame, but knowing, like I said, what I showed before, that you had this level, it used to be bullish. We came all the way through and gave it up, right? At that point, you can't, after this move down, if this bounce doesn't produce a higher high, more or less, after this move up, if that bounce does not produce a higher high immediately, and instead we take this level out and sweep underneath, you must wait for the retest. And you must wait for the breakout. Because this is not a breakout. It's just not. Breakout means breaking beyond a resistance, right? This is a breakout. That can get immediate results to the upside, and you can trade momentum, right? Same with this. Do you just want to like sit with an order down there? In my opinion, no, not unless you think it's really bullish, right? But if you make a high and then you retest, and now we break this high, with the triangle up, it's a breakout, right? That's a breakout. Test the support, or test, like, sweep up liquidity, retest, breakout of that high. That is where pink bars, stars, triangles, literally any signal, dots to the upside will create at least one more push. Because like here, keep in mind, this is, if you got in here, 84 to 209, right? So 209. So it's 120 points. So on the smaller times here, look. So on the smaller time frame, what this looks like, and I'm back at like yesterday, but this is what I was doing wrong all week. Is I was so focused, rather than thinking about where are the levels and what are we doing on the higher time frame, I was just like, it looks bullish, so let's buy stars. And then stopped out, and then they go. And I'm like, well, that sucks. I guess it's like, you know, what happened? And then I'm missing this one because I could stop, right? And then you see it going, and it's like, oh, I see. Well, it's clearly super bullish, so I'll just buy the next signal, right? So you buy the triangle, you get stopped out, and it's like, what? Right? and so it's very frustrating if you don't have those levels figured out. You're not gonna beat a 50-50 win rate with momentum trading, particularly if there's no momentum on the higher time frame or this time frame. It's just setting up with the same signals, but there's this resistance here that is old support that's acting as like a shield for momentum. But once we've gotten under it, recovered it, retested it, and clearly broken over a high, right? So this is the aggressive entry, would be that when this bar with the dot closes, that'd be your very aggressive entry, and it's not going to work 50% of the time. But if you get a high that then gets a dip and breakout of that, like this, that's actually, you really want this to break. Because see, you could, even if you took this, if you took this entry, you might get your risk off, but your runners stop. So what's the point if you're only going to get a 30% win rate, like with these breakouts? Why even mess with this, right? Just wait until this gets broken, because you know now that any retest, any dot, any star, any triangle is just going to keep going, right? See. Now, this one might have snuck out. Like, not every one works, right? This pink one technically stopped, right? But if you waited for the triangle up, this worked just fine. And you get plenty before it rolls, right? So I'm not saying you can't trade bullish when it's choppy. That's not what I'm saying. All I'm saying is you better know on the higher time frame, first of all, where the important levels are. And like I said, I've got the algo to do that, but you can do that with the footprint too. And the easiest way to do that, in my opinion, is determine where the volume is first, right? You can draw the volume profile. you can do here. I'll show you it that way so it makes more sense. So let's say it's Wednesday, April 5th, and you're trying to decide, is this bullish or bearish? Well, one thing you might want to try is starting at the support and then dragging up to resistance, drawing a volume profile and figuring out where most of the volume was. And what you'll see is the point of control is way up here. So that's where like the mode of like the most volume was, right, is up here. So that's going to be an important level to the market. And if we give it up, it's going to have to be retaken again, right? But it's probably going to be choppy in that area. And then look, there's two other volume builds. There's one here and there's one here, right? 3 clear volume builds. And if that's not clear, let me change the color. Because, like I said, I know that some people aren't looking at this on a big screen TV. So let's do something very easy to see like that. Okay, so if I just mark these off, so this, like I'm just gonna like estimate, right? So we have like a general volume area. If this was a day and this was the POC, this would be like where 70% of that volume is, give or take, right? This one is like, I'd say about here. And I'm just thinking about this like a normal curve and trying to guess where like the first standard deviation is. If you've ever seen like a normal curve drawn out, right? And then there's the other one, right? So these are just volume builds is all I'm looking at. So those are the builds and those will act as magnets. Now, the important levels are rarely, the important levels to watch who owns, like this, are rarely the volume builds. It's usually the low volume nodes. So, let me do this. This is the lowest volume. See how low that is? That little node digs way in here. So we're going to mark that one first. This one is the one that I thought right away. And like I said, I can see it because I have the algo. I knew it was there. But that would be an ideal spot. And then if you look here, there's one right here. See that low volume node? That one might be important for a short. Oops. Right about there. And then this is the other one that sticks out to me, right? There's a little spike in there, but the low volume node starts like up here. So I would probably draw this. Oops. Up to that little spike, right? So once I've got those drawn, and I'm here, what I would then do, and then obviously you need the high and all that, right? Then I'm going to have to turn, that on. So now we should be able to see those levels on our, let's do it on the 24 tick, just so it's bigger and not as much work. So let's see, 4 or 5, right? So there should be, I got to turn them on. Okay, so we're inside of the high volume node. That's what this yellow is, right? It's the high volume node that's up there, which is actually the POC of that move up, right? So this we should expect to be a little bit choppy. And then here's our first low volume node up here. So if we can get a short up there, that's preferable, right? Otherwise, our first low volume node is here, that green. So really, if we want to be super conservative, we just don't take any trades in the high volume node and instead in the high volume area. And instead, that's basically our target, is to get back into this square, this rectangle. So watch, if I just ignore all of this. Now I realize this means you're only going to take a few trades a day, but your win rate's going to explode if you do this right. So look, they leave the area. It looks like we're not, did we get a chance to do the low volume node short up here? So I guess the low volume node short was earlier. So this is the low volume node. This is and then the high volume node comes all the way down to here, right? And starts, it can't, it's right up into this, right? So what I'd want to see is I'd want to see them get over this low volume node and then give it up. Preferably putting in a little arrow here, but we don't have to go into all that yet. So this move here is my first sign of weakness. We knew that we had a low volume node there. We got above it, and they gave it up with with a momentum arrow. If it then acts as resistance, I want to be looking for shorts, and it does. So my short would be here on the purple bar with the triangle down, or the star, and my target is basically like the voodoo range level or so, or else the opposite side of the high volume node down here. So I definitely take some profits here on that drop because it might come all the way back up, right? If you wanted to hold a runner, you'd be targeting down here. And if I got that close and then we broke that high, I'm probably just getting out, honestly. But it does eventually nail your target to the tick if you were patient enough, right? And then you'd be out of the short, and then you'd be waiting for it to come back and test one of those low volume nodes again, right? So that's 1 for 1 out of that. As long as you knew. Now, remember, when I say it's 1 to 1, that's because I would know not to short this, even though that would have worked. That's not where I'm looking to short technically. And I know not to short this, even though that one worked a little bit, because you don't know how far this retest is going to come. So for instance, if you shorted here, which is that little brown line there, which is like the opening range high, if you shorted this triangle down and put your stop above that high, you get nailed there, right? You might get your risk off, but you get hit, right? Even though your location was good, you would have only gotten one swing there. I mean, it's not horrible, but it's, and then let's say you then followed through with this triangle down, right? But you're above the low volume node. Guess what? That low volume node is going to act as support, and you're going to get hit again. Okay? Then instead, once you see them take it, right? This was the first one. They tested above it. They took out liquidity, and they took the level. Now the high odds trade is when you make the higher low and reject the low volume node. It can be at the bottom or the top, and it's usually got a pink bar associated with it right before the aggressive trader comes in, just like this one did. It usually looks just like this or just like this, right? Pink bar followed by something aggressive. Diamond, star, ring, arrow, something, right? Some signal. And then it's usually followed by that red triangle down. So this would be your absolute first most aggressive opportunity, and it's not going to work 50% of the time. This one is going to work a ton. In addition, once you get this, you can momentum trade now. So these now become resistance. So all of these triangles are also good entries, okay? Because we just rejected out of the important level, right? And we knew to trade to the bottom of the high volume area and to get out of the trade, because you don't know, it can easily swing all the way back up to the high here without much volume. See, it actually got down to the voodoo range level. But look, that here was 2 voodoo ranges, which is crazy. Usually it's a lot, that's usually like 1. The VR is like half what it normally is. So in these little moves, it's like that's crossing 2 VRs. So that can be an all-day process, right? Because like I said, the voodoo range is like a natural rotation. And so to get 2 of them like that, yeah, it can take all day. So then we come back up to the voodoo range, we get it again, pink bar, star, triangle down. We've already met our target, and we have not returned to the low volume node, right? This is extremely aggressive. Extremely aggressive. It's not wrong. It's just late, right? And it works. It's not wrong. It's just late. Then we get under it. Now, the other okay trade, if this momentum is clear, the rejection off of the high volume node or the lower high after that is not bad, but it doesn't always continue right away. This is better. That is what you want. Anyway, our target in that case is the low volume node, okay, because this is where we want to look for long. So we hit it right here, right? The low is right on the low volume node. Do we have to get long right away? No, we don't just have to flip, right? What do we want to see? We want to see them take liquidity, okay? Liquidity taken, right? We traded underneath some aggressive bars, like the star bars, the ring bars, bars that are outlined green, bars with diamonds on them. We've taken them out, right? Got out underneath them. So we got underneath the low volume node, underneath like an aggressive buyer. Now, if we can just break a high, we might be able to get back through that low volume node, and then you could try for a long when it retested, right? Otherwise, we're going to the second one, and sometimes it's just going to rip right through them and not give you a trade setup, right? So note here, we put in a heavy seller near the low. They trade above it, but the volume line doesn't get above it till here, and then they reject. That's a decent trade as long as you have a good location here for a continuation of the downside. Here's our third low volume node, the little green area. That would be the location that we'd like to see buyers retake. But again, what we need to see here is we want to see them put in a heavy buyer like this, pull out, sweep up liquidity, preferably through the low volume node, then break a high, more or less. So this does not really count for me. We technically did sweep up liquidity, but we have not gotten through the low volume node. I'm not confident in this environment with taking that star diamond here. I'm not confident about it. If it was very, very bullish on the higher time frame, I might do it. In this environment, I'm not doing it because my expectancy here is basically back to 50. Best case scenario, I get 20 points, and I have to risk 20 points. And I don't think it works 60%, 70% of the time. So even if it works this time, which it does, I'm not necessarily taking that trade. And again, that's a difficult adjustment for me because it's a valid trade setup at location, you know, in the direction that I prefer, but it's not in the direction of the trend. Unless, like I said, on the higher time frame, it was clearly bullish. And maybe it was if you zoomed out far enough. Everything else is there. But what I really wanted to happen is I wanted a high to be put in, and then I wanted to break over that high or to break over this high. So if you look, this high got broken out here, right? So now if we come back in and hold this area, you could get a long, but you're going to have to believe that this auction is complete. And I have a hard time believing that considering we did not trade through the low volume node. So it might work. It would be right there on this dot when that would be your momentum trade entry or the triangle after it. And your target would be this low volume node. And it works, it just doesn't quite get you there. They run into some trouble here. And at this point, I'm probably done with that trade. Because you had a heavy seller. We got behind him, right? We sucked up liquidity. So now, if we break below this low, I'm not really bullish anymore. Right there. Right here. I'm not bullish anymore at the moment. Like, that shouldn't happen if it's bullish. We shouldn't sweep liquidity and then immediately take out we shouldn't take out the low of that wave. Plus, it was divergent. We didn't accumulate very much volume up there. So chances are we're going to come back to wherever the volume was, and that's probably down here. So I'm going to need it to set back up. See, I'm not taking these. And that's a big difference for me. I used to be like, hey, this could be the low. We're supernova. We're defending this low. Triangle up, let's go. But I'm not trading that way. Even if it works here, this is not working as often as it used to. This time it might. This time it works. But that exact setup has been failing. Now, the way I might be able to know that that might work is, again, if I checked the volume here. Yeah, see all the volumes down here. I would not have taken that trade. We did not come back and check on that volume. There's a low volume node here, and that's what it's running into, but it's bouncing. But I don't trust that when the higher time frame is not clearly bullish. But like I said, maybe on the 4th or whatever this was, maybe it was. But normally I'm not taking that trade because I do expect this to get tested. And I don't have confidence that this high is going to get broken. Right? So we do trade back into the volume. And not surprisingly, I imagine we trade right through this low and go auction below the low volume node. That would be normal. We don't. We bounce right off that. So this looks pretty bullish. Right? When it does that, this usually happens when the higher time frame is bullish. So maybe I'm wrong. Maybe I went too far back. And maybe 4-6, it was still bullish in the higher time frame. But this is what I was used to. This is not working right now. Coming back to the volume level and then rejecting immediately before going down and sweeping up this anomaly is not working very well. This time it did work for a nice little scalp. And then it ripped through it. Okay, we have big volume here. Big volume back here, right? We swept up liquidity. Now, if we can get back above this low volume node and it acts as support, I'll buy it. Well, I shouldn't say that. I'll watch to see if it breaks over a high and then I'll trade it with momentum, right? Sweep under it, come back up. This would be a very, very aggressive buy here that I usually would not take, but you could do it. It'd be very aggressive. What I want now is I want them to come back and test this. And like I said, these, I'm not taking these. I used to take this and this. But then I'd make 40 points, give up 20, and it'd come back and I was back to break even, right? Because they're just not working often enough. So once we've made this lower high in particular, I'm not messing with it. And then particularly if you look at the volume, I've got 2 volume oscillators here. This one's a little bit smoother and this one has like a lot of movement in it. The dots generally will show up at times when the choppier one has like a pivot, but the slower one doesn't. And those are generally signs that of like a trade opportunity in markets that aren't so choppy. So, but you can, like here, when you got dot down, dot up, triangle up, this move right here. And then if you look, this is nice and smooth. And this one went chop, chop, right? So this would normally be an opportunity here if it was not so choppy. But in this case, what it ends up doing is it actually makes a divergent high. That's the problem here is that so this high, this high is higher than this high, but this one is not higher than this high. So you're getting so much movement in this indicator with just tiny volume. And the reason is because it's been so illiquid. Normally, you're not going to see this happen very often, but you do when it's illiquid. And so here too, see higher high, lower high. So the better move is to short this triangle and go with that divergence. So now look, they came back. I want them to hold this, and they don't, right? I have to start all over. Now we're sweeping, right? So what I'd like is to get a big volume, which is like a diamond up, or a star up, or a ring up. I want to get under that, and then I want to break back over it. That's the first sign of absorption. But to really know that I'm bullish, I need to put in a high, and I need to break over that high. So this is our high right here. And this is the first time we're breaking over that high, but this is really the first time we've broken over it with volume. The problem is now you're trading right into this low volume node again. So I wouldn't take this as a momentum entry personally because of the location. And this is exactly what I was talking about earlier, that normally if it's big sweeping moves in NQ, you can take that and it's fine. But in this illiquid market, it's gonna move 20 points and like tick you out and then run. Like this move sometimes comes all the way back here only to trap back in again. Now, sometimes it doesn't do that, and it would work, but that entry is really aggressive in this environment. Note on the oscillators, if you're watching these, we had a divergent low, so we got lower lows on price, but higher lows on the indicators, right? And that helps this lift and usually makes triangles up pretty good for an entry. Aggressive, but often works as long as you're at location. But anyway, we made it over this, right? And even if you miss this entire move back up to the low volume node, that's okay, because really we wanted our entry to be after we get through this on a pullback. So we pull back. Now, like I said, this is not good enough for me. We've not really retested it, and I'm the only way I'd take this is if I knew I didn't have a chance for divergence. But you can see here we've already met the high on the indicators, and here we have not. So the chances of this rolling over are too high for me. And what do you know? If you get in here, you only had like 10 points before it takes you out. Then it comes back, tests into the level. That's what I want, right? But rather than taking it immediately, I need to get over this level because it can do it twice. Okay, right here. Oops. Now, it made a high. It got over the high. Now we're good to trade momentum. In fact, it did it right here. The plus bar got above it. See that? And then it's gone. Right? So that, all of these trades now are fine. You can be super bullish here, and you do not short once that's happened. Right? You don't fight this at all. And you can see that we make it through the low volume node, and so that one then becomes new support. But notice what they do. If you took an aggressive momentum entry here, they stop you out, only to trigger again and go higher. And so, and like I said, that is very rare after a move like this to get a trap back in that works. Usually the very first one works, and that's it. And this is doing it after like 100 points. So it's very unusual, but it's working. Only with location and direction aligned, right? Otherwise, it's definitely not working. And so we get all the way back up to the high volume node, and that's where I'd want to be exiting my trade, right? With runners out. I'm not buying this, okay? When it comes, remember, this is like a key level. I'm not going to buy into that level like I might normally, because this resistance is now strong, and you can see that we got divergence on this choppier volume indicator. And so if anything, this triangle down is your better entry, as long as you can put your stop up here for a short. That's better, right? So the divergent trade does work as long as you're going in the right direction of like the market. So they come back into this low volume node and they bounce off of it. This, since we've owned it, came back, tested it, and gone higher, and then came back and held it. This is an okay entry, okay? But notice we've already pushed really far on this indicator. So if we get one down bar, I'm out of it. But you can see it just goes straight up, which is fine. So right there, one down bar, I'm done. Because look at the indicator. Lower highs, higher highs. It's not going to be able to overtake that, right? And that was a tight entry because your target is right here. So that works out fine. And again, do you miss this? Sure. But who cares, right? I'm not aggressively shorting until I get a seller who gets stopped out at least once, right? And then I want to get under a swing low or a blue dot. So this needs to break. This needs to break. So I'm still not getting short. Now it's bearish. No, we're not making divergent lows. There's really no reason to think that they're just gonna like lift this all of a sudden. So now if I want to be a little more aggressive on the next bear entry, I can be if it sets up. So we didn't have a pink bar here. If we would have, then a triangle down gets me short. I'm kind of hoping it sets up here. There we go. Pink bar, triangle up, followed by a ring down on a lower high. It'd be better if we had divergence, but we don't. But as long as we get a triangle down, it's good. Right there. So that's your short, targeting that low volume node. Oh, that one fails. And that was aggressive. But you can see the idea here is that a high volume node ends right here. And so once you've swept up liquidity, what you expect is retests that reject out of here are usually good. And we did trade underneath a low, and we got a setup, and it just failed. Right? They're not all going to work. But this is, like I said, if that is fine to get a stop, but if you didn't have any of these filters, that would have been like the 6th stop of this day. You know, with the filters, it's like the first one. So what they end up doing is they sweep it all the way back here and then probably dump the whole thing. Yeah, that's bull. And this is just Sunday night. I mean, holiday trading, you're going to get stuff like that. But note what happens here is they sweep all the way back into this low volume node to the back of it, right? So the very aggressive trade is to take the triangle up here to get out of it, targeting back up here. But the better trade, in my opinion, is to wait for the retest again. Otherwise, you can wait for the break of this dot and then an aggressive sign. So that would be getting long here. But what you'll see is sometimes you'll get a trap back in, see? And then sometimes it'll go right here. Because we did get a star stopped out and got over a yellow dot, but that was a very aggressive entry. What we really wanted is pink bar followed by star up, followed by triangle, or diamond followed by triangle. So star, no triangle up, nothing to do. And they gave it up, right? So if you wanted to be very aggressive, you would short this. So the diamond inside the bar with the dot, when there's lots of momentum, as long as it's followed by another bear bar, that is usually a good scalp. But it's fast. It's 10 points and you're out, and then leave runners. So you're out here, and runners go to a target, which would probably be this voodoo range level right there. I'd probably be out right there. Or you trail stop to be like breaking over a swing high or a yellow dot. Yeah, apparently that's a better idea. So here, if that one breaks, you'd be out right there. You can wait for a close above if you want, because it might go lower. Let's see if we get a close above one. No yellow line didn't get above it. Notice we got underneath the low volume node, rejected it on the back of it, right? So if you wanted, you could do the same process here since we've gotten beyond it. We've retested it. Breaking under this gives you a bearish breakdown. But the problem is that we've been breaking down so much that you're shorting in the hole here. So now what I need is for them to actually come back into there and tag it, and then break down underneath a low. But they need to hold it here, which it does not look like they're going to do. So see, they got the yellow line above the green low volume node, which means that they develop volume above the low volume node. That's not bearish, right? It could just be chopping back and forth. It's not a reason to buy. It's just like, I don't think I want to be shorting if they can put volume above these low volume nodes, because I wanted that to be resistance. They did like this, and they didn't hold it. on the way back. So you really don't want to trade breakouts to the downside here either. Now, they on the second try here, they could reject it, and they don't. So there's just no trade there. And this is the problem, is that if you want to be this conservative, like this is the open, and it got all the way to the low. And even though you had, green bar and pink diamond getting stopped out, and you got over a yellow dot with the yellow line like this, if you didn't care about location, that's where it gets bullish. The problem with that is that you've got a low volume node here, so you're trading right into a low volume node with a 22-point stop. And while this time it happens to hold, it doesn't always work, right? And so it's not that it's wrong. It's just even that is a little bit aggressive. But once you've got the location figured out, and you know that you need to hold this level to be bullish, well, now that we've gotten over it, now coming back and tagging it and bouncing is bullish, right? So once they now break above this, I'm like, oh, they came back. They hit probably where the volume was, if you look. So, oh, I went too far. That's after the breakout. Before the breakout, right there. So see, this is where all the volume is. That pink bar is. And really, if you remember, this is not, the single line doesn't really matter, in my opinion. What matters is like the volume area around that. So, see, this whole thing is a high volume area. And we tagged into it beautifully, right? We didn't meet the bigger time frame level, but they reclaimed it. Bulls reclaimed it here or here, and then retested where they put volume in, just like on that previous day. And now you can trade momentum. So even the star is fine, or the triangle or the dot. If you're ready for that trade, those work as long as you're not trading right into resistance. And then what you should see is volume shifting higher, and then they should not give up that level. That level should, so you can actually trail your stop to like the below the low volume node. So your stop goes like here. Right basically at your entry, which is like the only time I can do that. Come up. So once they've hit this, I don't, it's going to have to come back. See now that volume, it needs to come back and hold this again. And it does. See how it holds that level again for a second time? So I would be out of the trade here, personally. I'd be out of the long here, most likely, if not higher. Because they continue to shift volume up here, look. I wouldn't have to wait that long. Look, they continue to shift volume up. See that? So my stop is going to shift with the volume. So right here, I'm out of the trade. But then they come all the way back in and they test the high volume node again and give me star triangle up plus breaking a dot. It's bullish. Now you can trade momentum. Dots, triangles, stars, everything starts to work. Right? And again, when am I looking to fight this? Well, first of all, I need to stop out. I'd like to get to a location. I need to stop out some sellers. And then I need to break down underneath. I preferably would like to see a divergent high. And then I need to break down underneath a new low. And yeah, preferably not an old low, but a new one. So, for instance, here's my star with a ring and a lot of volume. It's purple. We stopped him out, right? We actually put in a huge volume wave there to the top, right? So this since it's a big volume wave, that level is going to be what matters more or less. It's right on the voodoo range level. That's kind of funny. So is this week? Oh, that's today. Yeah, so that makes sense. So basically, once this occurs and they shifted volume up there, right? Volume's all the way at the high now. And I know they've stopped out this big seller. They've sucked up the liquidity, and they're back at location, the high volume node, and they rejected out of it, right? Since the sellers rejected out of it days ago, right? Same area. You don't want to be a buyer, obviously. And to be a seller, what I need to see them do, preferably, is since they've already swept liquidity, I want to see them take out one of these blue dots and then hold that high volume area. Now I can look at it and double check where it is. If you don't have the algo to tell you, you'd see that it starts at the voodoo range level and it comes all the way down to about the orange line, right? So basically, as long as I can hold under that without getting the yellow line above the orange line, or no, above the pink line, on a bear bar, we should be, on a bull bar, we should be good. So we've given it up, or we got to get under the blue dot or put in a low and then give that up. So here we've given it up, right? We got underneath the blue dot, but we haven't come back up to test the air. Well, maybe we did right there. That might be all you get. The bear side, sometimes you don't get a very good test. So that wick might be it. You might have had to nail that right there. Oh, good. They came back up. They test. So see how the yellow line, where all the volume is? It gets up into that high volume area, but it immediately goes bear. If that's followed by a triangle, that's my entry. That's a short. And your stop has to go up here, above the high volume node, high volume level. And this one's might not stop. Your stop has to go above this. It's very close. It does stop. That's what I'm saying. That's stop number 2, right? Being just a tiny little bit aggressive, even though it's at location. Now, the problem here, if you look, is you have a ton of volume down here too. See this? So the trade, quote unquote, worked. It's just, it didn't have anywhere to go. It had this high volume that it put in here, and they absorbed it, right? So if you see that, they got a star, they stopped it out, and then they came right back in and reclaimed that star. Doesn't look very bearish, right? It just didn't reject it like you'd expect. But yeah, if you think it's bearish there, here, and I'd say it probably did look like it, and then it sets you up, I could see taking that, right? It definitely stops. And then the only way you'd be able to get long here is if you identified this location one way or another, right? And you're like, I want to see them get over it, come back and hold that orange line and not put a yellow line, not put the yellow line underneath it on a bear bar. Whoops. They break over it. Do they pull back? Pull back. Now they'd have to hold this, and they don't. So it was. This is exactly what I'm talking about. What we saw overnight last night is exactly what I'm talking about. This price action is very challenging to trade on this time frame, right? Now, if I zoom out quick, and I'm now at Monday night trying to ask myself, should I be long or short? Well, even on the 80 tick, all I can tell you is that we're trading in a range, right? That's what it looks like to me. I can delete everything off of this chart and tell you, well, I really don't want to short unless I'm up here, and I really don't want to long unless I'm down here. So the answer is you just don't trade here. You just don't take it because you're in the middle. You know, what you want to see is a swing up here to get short, or a swing down here to get long. Now, this one did give you this apex trap on the 80 tick. So if you waited, if you were like, I'm really jonesing to trade, even though it's Monday night, I really want to take a trade, you could say, well, hey, if we can trade over the high and give it back up again, and it sets up, oops, then I'll take the trade. So it would be here. So you wouldn't be bullish at all. You'd just be saying, I just need this high to be taken out, which it does right there. And then you'd say, I just need to take out a low or a blue dot, which happens right there. And then I want to reject a key location, which happens in that wick. And that's all you got. So that would be the only way to catch that pre-market, in my opinion. And like I said, I think it's easier just to say, don't even try. Don't even mess with it, right? So it comes back into the low volume node. Again, this level is still important. You can see how they caught off the back of it. That looks pretty bullish, right? Hopefully you can kind of see this pattern now. And then you have hidden divergence down here where it goes lower on the indicator, but it goes a higher low on the price. And if it's bullish and you see that, that dip is probably getting bought. Now that will not work if it's bearish, but if this is support, that can work. The other trick, or another real simple way to try to determine, even when it looks like this, here, let me just erase everything. Let's say you don't have any idea of any other way how to do this. Let me erase all of this. And you just want to know who's in charge. I showed this in a Twitter post, but let me show you how this works. And then I'm going to take a break and we'll dig into a couple setups here using some of these ideas. So, like I said, yes, you can trade at location. You can wait until that location gets a retest. You can wait until that, and then you can wait until the side that you're trading with has had their stop swept. That helps, right? Be the second mouse, not the first mouse. Don't just take the breakout. Wait for them to sweep underneath the stops, pick up liquidity, then break out and retest before you then see if they follow through. You can wait until they trade over a new high or a new low to identify momentum, and you should see some changes in aggression and speed at that point. And that can help you decrease stops, right? So you have all those ways to avoid getting stopped after stop after stop. Because if you follow all those rules, you're going to have like 2 trades a day, right? But most of them will probably work. The other thing you can do, because sometimes it's not so obvious which side is winning the battle, even on the higher time frame like this. Like in this situation, I see them coming down being bearish, but now it looks like they're kind of solidifying here, right? And it's like it's possible that it might bounce back. Like that's what I would think if it was, if you saw this, you'd be like, okay, obviously it's bearish. I don't want to be buying. But once you see this, it's like, oh, you know what? Maybe they put in a low, right? You can kind of see how they lifted it. They had a sweep, right? They went over all the things we just talked about. So it's like, hey, if this holds, right? Maybe it'll bounce out of here. That would be pretty normal to be thinking that. But the point is that at this moment, you need a way to know, is it okay to buy or can I still short? So a very simple way, using the purple and pink, the no supply, no demand bars, is if you have a purple bar on the algo, and then below that, you have a bearish bar that's not purple. In other words, volume is increasing as price decreases. That's what that's basically telling me, more or less. Because again, the purple bars are buyers pulling their orders off the order book, causing illiquidity. Whereas the bars that are like this, like stone color or orange, like there's some buyers fighting back in here, trying to take that level, but bears end up closing it. You can tell because it's got a wick above it, right? And then on the upside, the pink bars are sellers pulling their order, leading to illiquidity and price rising, even though they didn't need a lot of work. Whereas the white bars or the green bars, there were some bears who were clearly actually participating in this wick, but they closed at the high, right? So all those wicks are going to be on the lows. So if you have a purple bar that is followed underneath it by a bear bar that's not purple, the assumption should be that at that moment, I'll show you where the first one is. So way up here. So purple, purple, purple. See how you can't get any bears to close underneath that purple bar. It closes at it, but not below it. And then you get a purple bar right at the low. You haven't closed any more bear bars underneath the purple bar. The potential for its lift is increased. But if you've got a purple bar and then a bear bar below it, right here, you know not to be looking long on the smaller time frames. Right here. Okay, so if you now go, this is the 24 tick. So now if I go down to the 15 tick, and you'd want to do this on the 40 tick too, but get at least 2 in line, if not 3. But now here, where I know that it's bearish in the 24 tick, I would stop. I would totally ignore the bull entries, and only, it doesn't mean I can aggressively short, although in this case I probably can. But what you'll see is like these trades, these triangle up, are more likely to fail. See that? Whereas triangle down, not every triangle down is an entry, but that's a pretty common way to get in. Those are generally going to extend, right? Triangle up, doesn't work. Triangle down, eventually extends. Triangle up, doesn't work. Triangle down, eventually extends, right? So you could keep going like that, and you'd expect that to continue until you get a pink bar with a buy bar above it, right? The exact opposite. So here we have a pink bar, but no, we can't close a buy bar above it, and so in this case, you continue to go lower. Now note on the tiny little 15 tick, up here you did have a pink bar with a buy bar above it. So just because you had that does not mean it's bullish, right? Because the higher time frames are bearish. So what this probably means is the sell opportunity is coming up soon because you want to trade in the direction of the higher time frame trends in general. But you may have a reversal entry coming up to join that. So that's what I was talking about before. So that next triangle up, this, will often work, right? If you want to wait and be sure, well, wait until a blue bar gets taken out and you get a triangle down, which would be here. And that one gives you an immediate drop, right? So if you want to use this as like a caution sign, I think that's fine. But realize that when you get pink bar, bear bar, and then you get triangle down, after this, it's probably done, because this pink bar might have produced a bar above it, but another pink bar came out and they were unable to push above that, and the higher time frame is bearish. And like I said, if you want to be absolutely sure, you could wait for this low to get taken out. But what's interesting is all of these same situations, all of the same conditions that we were talking about in the higher time frame are actually present here too. If you look, we have a star down, that, right? We have a star down here. Oh, did he not get? We got it here. Star down here. We swept up the liquidity, right? We broke below. We created a low and broke below it, and then got an aggressive seller to come in there. It's all still there. It's the same thing. It's just that we're so zoomed in that like that whole thing took 10 points. But we knew which direction to go because unfortunately it's also potentially there in the other direction too. In this case it's not, but sometimes it will be, right? Sometimes you'll get a little like this will go like star, pull back, and then star, triangle up, and then roll over, right? If the higher time frame is bearish, that's not that unusual. So here you'd keep selling. Now here's a pink bar, but you can't get above it, so you'd still look for sells here, right? So again, we could say, no, they don't have a triangle here, but we had a dot, we had a star, and what are you doing? Oh, cat. Okay, and then so here's where you start getting purple bar. See, this purple bar got a bar closing below it, right? So it was still bearish. These purple bars, they're not currently getting any. That's another purple bar. See, so here I'm getting a little bit nervous about shorting in the hole because we keep doing purple bars and we're not getting any bear bars. Now we got a bear bar, but we're at support. Probably not taking an immediate sell, but if they now set up short, I can probably take it. So here, I don't want to short this or this, right? But when I go triangle up, star, triangle down, and then if I want, I can wait till this breaks and then see if I can get a setup down here. It's not wrong, right? So now if this is followed by a triangle down, so this would be it's underneath support, right? After we retested it. This is your conservative short entry with the trend. And that one fails. One of them's going to fail. Every time one of them's going to fail, right? The last one's going to fail. It happens to be right at support. We don't have the other one on here, but see how you've got divergence on the volume indicator? That is a big red flag. And you knew that. See here, it's like once they get under it, right there, it's like, oh, we're not getting more aggressive with volume. See, if you look at the yellow line is stuck here. It's not going anywhere lower, but yet and then if you look, this is a divergent down wave. It's got barely any volume down there, the gray that I'm pointing to here, compared to this one. It got lower even though price went down, right? So all of those are, all of a sudden you want to be out of your trade if you see that, basically. It's a big warning sign that the trend might be stopping. And then what did we get here? We got green bar, swept up liquidity, right? So now here's our high. So if we break over that high, it's now bullish on this time frame. That doesn't matter unless the higher time frame is also bullish, right? Well, pink bar, it's still not bullish, bear bar, right? As you can see, even though we trade above it, if this goes purple bar star, the chances that works are not good. Oops. So this, if this was a star, I'd still not take it because the higher time frame has not produced a pink bar and another bar above it. So instead, the star down, triangle down, continues to be the best trade entry to the short side. So even though we got this little wiggle here and we might have gotten stopped out, this is what I was talking about before, where you might buy the dip, but then it keeps dipping, right? This is the same thing in reverse. Like you might have gotten, well, I guess not in reverse. You bought the dip because it started to look bullish here, and then it just keeps dipping, right? And the reason is because the higher time frame is not yet rejected yet, right? So the same way as like in 2017, 18, 19, late 20, you'd get a down day, and then you'd short, and they just rip right through you, right? It's like it did go down for a day or two, but it rarely held it down. It was really hard to keep the market down. Well, same exact thing here, only kind of in reverse, right? Depending on what's happening. I'm so zoomed in that it could go, even if it's bullish on the higher time frame, like weekly chart or something, or the daily chart, it could still be bearish on the 80 tick, right? So like I said, I'd stay bearish here until I get that pink bar with a bullish bar above on that. At least the 24 tick. Okay, there it is. 24 tick produced pink bar, bullish bar above. Now, I'd prefer that the yellow line actually overcomes the high of the pink bar. So, and in this case, it didn't quite do it. If you see, that's the high, and the yellow line there, if you look, is actually lower than the high. So it's not perfect, but it is a close above it. See that? It's just a little bit lower, but it's not perfect, right? And the very next bar goes lower. So it might not be immediately bullish, but it's a really good time to stop buying, right? So remember that occurs here. So there's really no way for me to catch this triangle up, and that's okay. I missed the low, and that's okay, right? And again, even though everything might have set up here on this time frame, I'm not focused on catching this trade, because to do it, I'd be taking this one and this one, and this one, and most of those would stop. So instead, I'll skip this one, and then notice on the higher time frame it said bullish. On the 15 tick, pink bar, bull bar, clearly volume higher than a pink bar, right? So now, if you recall, what needs to happen? Well, I need to make sure that there's been a buyer that got their stop hit, right? I want to be the first mouse. I need to get over a high, and then I need to hold on a pullback into wherever the volume is. Now, one easy way to know where the volume is if you see this dotted line, it's red, white, or blue here. That is generally where the volume is currently. That's like the current developing value area, or I mean VPOC. So that's an easy place to look to see if you're above it, bulls are in control. If you're below it, bears are in control. And if you're wiggling around it, what you want is a breakout and a retest. So here, bulls got over it for the very first time. See how it was up here? And like, even though we ripped, we didn't even approach it, right? And then here they rejected, made a lower low, came up and actually broke over it with white bars, not just pink bars. Up here, we did the same thing. Got over it with white bar, pink bar, white bar, came back, tested it, everything looks good, and we fail, right? Because the higher time frame is bearish. Well, here, had we come down, tested it, and bounced here, I would expect it to go higher. Instead, it got under it. See how the yellow line actually gets underneath it here, right? And that is a sign that it's not going to set up appropriately. Note that if you would have taken this star all by itself rather than waiting for the triangle down, you get hosed. Well, one reason is because you didn't wait for a buyer to get stopped out, so you are the buyer that gets stopped out, most likely. Instead, if I see a star up, what I want to see is them to get under that, take liquidity out right there, and now I'd like to see this high or the next high get broken. So this is your very, very, very aggressive entry. The conservative entry is wait till a high gets broken and you get an aggressive bar, which is right there. Otherwise, you can wait for this high to get broken. This is also a totally acceptable entry. There's that high getting broken. Now you can pretty much take any entry you want. So that's good. That's good, right? Star, X, triangle up, pink bars, all of them are good until you hit your target. You have to figure out target, right, based on the higher time frame. But notice on the higher time frame, all this was possible only because we got pink bar followed by a bull bar above. And if you'll see this pink bar high that I was talking about before, eventually we do get the yellow line above it on a bull bar right here, which allows for the immediate breakout trades, the pink bars, the stars, all the colored bars and the dots and stuff to suddenly become buy signals for the time being until we hit a resistance. And then, like I said, now that can act as support and go higher. What I'm watching for now, see, this is purple bar, but then nothing below it. Well, here, this, even though this is orange on the inside, it's purple on the outside. And then bear bar. What does that mean? It means we better be ready for them to sell again, particularly if we've had an aggressive seller get stopped out, right? And a low get broken. So if we break down underneath this low, the next pullback can probably be shorted. On the smaller time frame, you'll see initially this looked very bullish because all the purple was leading to bulls and all the pink was leading to bull bars above it. Well, now all of a sudden we get two purple bars followed by a bear bar. Not bullish. If you want to be super aggressive and you have a location here and some divergence or what you do have here or anything like that, you could do it. But really the better trade is to wait for this location to get retested. And if you wanted to know where, you could just see where all the volume was. And you'd see that it was right here at the top. So as long as you can get a retest and a rejection right there, you could short it on the triangle down. Now in this case, it does not look like it's going to set up with triangle down. So you might have taken a stop here if you didn't wait for the triangle down. That's a very aggressive trade. But in this case, you might have been aware not to do it because you had pink, pink, white, which usually only shows up, remember, when it's bullish. And here you had pink, white at the same time. So that says, hold on a second, bear setups are about to fail. We should be getting like long on every opportunity because they have both now flipped at the same time, meaning that it can be high momentum up. So dots, triangles, stars, all of that all of a sudden become buys. X's, all of those are buys now until that. So that's rare. Like I said, it's very weird price action. Getting two purple bars followed by a bear bar in most cases is going to be bearish. But yesterday at 9:30, that wasn't the case because and that's just the way it goes. It came back into probably a high volume area, if I had to guess. It didn't even, I don't know, I'd have to mark off where it actually, it looks like there might be one right here, the blue line. It came right back there and it bounced, right? And if you missed it, you missed it. But the important thing is not to short this once you've got pink bull, right? Pink bull on the higher time frame. That's not what you want to see. The 40 tick, pink, well, it hasn't done it yet. Oh, pink bull. 40 tick's bullish, right? So 40 tick, you were bullish all the way back here. Yeah, same spot. So even on the 40 tick, it's like, yeah, let's not short. And so not surprisingly, every dip gets bought for a moment. But note, if you just bought right when the 40 tick said bull, you'd get stopped out only to see it hit your target. It's just that trappy. Because you didn't have anybody stopped out yet. So you end up being stopped out, right? If you look on what that looks like on the 40 tick, which is a little hard to trade because your stops are like 30 or 40 points. But here you had the divergence, bullish divergence here, right? And then you had a green bar get stopped out, right? And then any trades over any of these highs are actually what gets you bullish. So you're not bullish here because you haven't closed above. So this is the trap. You're not bullish there. That's an opportunity for all the late sellers to come in aggressively. That's what the star says, right? After briefly giving up, they all come in aggressively, only to get absolutely smashed, right? So only after the trap do you want to get long. That is key in this market right now. So as you can see now, all these bull trades are going to start working until we get purple bar followed by bearish bar. So right here, it's like, maybe we shouldn't do this. And again, big volume up to the high. You can do the same thing here that we did before. That starts back here. So that needs to be tested and hold, and it doesn't. Right? Now, on this other time frame, if you took it from back here, you'll see we had purple bear bar, right? If you just shorted that automatically, you get hosed. Pink bull, purple bull, all that's bullish. Purple bear bar, if you forgot how the system works and you just short that triangle down, it works for a moment and then you get stopped out. What's the better trade? Long that. Because the higher time frame says bullish, right? Then bull, purple, bull, still bullish, purple, bear, right? And now we've traded underneath. Oh, so now this was a divergent wave high to the high, right? And we had a seller that we got behind. It looks like we're going to break underneath the blue dot right there on a purple bar. Yeah, on a real bar. So on this time frame, this looks bearish. On the higher time frame, the higher time frame is bearish too. So here you'd know you were done. And if anything, you're looking for pullbacks to sell. And they just don't give you it. Now here, pink bar, bull bar. On this time frame, it's clearly bullish here. On the higher time frame, it's not yet. Pink, bull. There. Now the higher time frame is bull, but you're no longer at location. Right? So could you just buy it? I mean, you could,
Is the 30 tick is the 40 tick bull too? The 40 tick went bear here and is not yet bull. So the 40 tick went clearly bear right where I said this one looked really bearish. And so here you would expect them to come back up to this volume area and then roll, but instead they got bullish and ripped yesterday. Right? And that's going to happen. And like I said, you probably would not get a setup here. Did you maybe have some divergence and did you all that? Yeah, like, and triangle up did work, but it you'd have to kind of guess, right? Okay, so you can see here purple bear. If the higher time frame is bullish, you can't get bearish yet, right? Higher time frame, pink bull. Don't get bearish, right? Stay bullish. Only the bull trades will work until at least this one shifts. So see how it's still purple bull? No reason to short. No reason to short. It's you just turn off the shorts. Now purple bull. Nope, still nothing. Now I imagine in that case the 40 tick must have flipped. It did. So the 40 tick flipped bearish here, and then it flipped bullish all the way back here. So as soon as it flips bullish here, when everything's bullish, you can just start buying like any signal. See, because the potential for it just to lift off is huge. But no, like if you buy this one, it's very possible that you get trapped only to see it go higher. So you do have to, be reasonable. But most of them are going to work. Like this too. This late aggressive buyer gets trapped and then they go higher, right? Now purple. Should we be bearish? Is it high cap? We've got a purple bar here, so we might want to be cautious, but we have not seen any reason to be bearish yet, and it does not, right? So the only option here is to trade that bullish here. We don't want to short, right? Until at least one time frame, preferably two, have gone bearish. So still bullish. All yesterday, bullish. Okay, right there, bearish, right? Bearish, 40 tick, bearish right here. So the 40 tick said, watch out right here. These really didn't trigger. Well, the 24 tick didn't. The 15 did. Said, whoa, you might want to, chill. So now you'd want to stop looking for buy. So I would not buy that triangle up personally. And instead I'd be looking for triangle down. And I'd want to be at location. Because some of these are going to trap you, but you'd have to put your stop up here. Right? Now, pink, bull. Does it flip again? Doesn't have to last. Pink, bull. It's bullish again. Right? Everything's bullish now. And you'd only want to be buying dots, triangle up, star, whatever, and you could momentum trade again. How long? Well, at least until one of them, if not, right there, bear. Bear. Now definitely don't be buying. Right? But you might have missed this if you waited for the 40. Right? But now since they all flipped, now triangle down, dot down, star down, all of those trades can work again until pink, triangle up. So here, you'd want to stop doing that. So you might have done it once and then hopefully saw, whoa, we're getting huge volume coming in, right? They're not setting up triangle down. And on the 40 tick, you only get bullish here. And then it doesn't even set up bullish. It just flips. Now, one way to avoid all these flips is to look at the 80 tick, to look higher. And on the 80 tick, you can see it got bearish here. So on the 80 tick, it said, I don't care if it says it's bullish on the 40 tick because the 80 tick's bearish. So I'm not buying this. I'm going to wait till they're all together, right? So 80 is bearish. Now 24 is bearish, which means 40 is probably bearish too. Not quite, but 24 is. So I'd say you could at least sell pullbacks, if not aggressively sell this. Yeah. And again, you'd have to keep going back and forth. See, now this is bullish. And this one not so much. Nope, bearish. So that one would have said skip this. You just skip this one. Right? Unless, yeah, it didn't set up. So there's nothing to do. Then it turns bearish here, bearish on the high time frame, and bearish on 24. So now right here you can start getting aggressively bearish. So all the triangles, all the stars, everything just short, right? Until you keep staying short. So see how that kind of keeps you on the right side of things. And then all of a sudden you get above these purple bars and it's like, oh wait, maybe I shouldn't be so aggressive. And then you get above a pink bar on the smaller time frame. It's like, ooh, maybe I should be buying pullbacks. Let's see what the 24 tick says. 24 tick says purple, bear. Nope, stay bearish, right? So even if you paused here and missed this, you know not to buy, right? Pink bar, let's see. Nope, says don't buy it. Pink bar, diamond down, triangle down, short it, right? Now here, purple, bull, pink bar, bull. Be a little cautious, right? Don't be so aggressive. So I would not short a star down. I'd wait for the triangle. Now, once you get pink, bull, well, we better check the 30 tick. It is not triggered yet, which means the 80 tick is not either. So you might want to be a little cautious. Just because it's bull here doesn't mean you have to buy everything. They immediately roll it, and chances are that's your entry because the 80 and the 40 are bearish, and it gets you back to support. Again, you have there, pink. Nope. Triangle out. That's probably still good. See? So pink, bull. Okay, let's check here. Pink. We might be flipping, right? Nope. Triangle down. We know that can't get bullish. Triangle down, bearish. Short. Right? Pink. Caution. Pink. Caution. Okay. Above pink. Don't short aggressively. Pink. Above pink. You can probably buy aggressively as long as the 40 tick also flipped. Not yet. Wait. Pullbacks only. So you do nothing. Right? So there's lots of waiting here if you use this method. Pink, nothing. Now, do I want to short that? Not really. Because, well, maybe. Because look, purple, bear. You probably could short pullbacks right there. But your target is support. So I don't know if you want to do it or not. Pink. Here we go. Pink. Bear. Bull. There. Everything flips all of a sudden to bullish. What do we do? Any pullback? That. Is 30 tick? 30 tick needs, or 40 tick needs to be bullish too. 40 tick's not yet bullish, so don't buy them aggressively. Wait for a pullback. Oh, I guess you have to buy it aggressively. Yeah, this one got bullish a while ago. Here. It's just unfortunate we had a pink bar here. It just didn't really set up how you'd want it to. That's okay. You just miss it. Right? It gets bearish here again. It gets bearish here. And so now pullbacks can be shorted right there. Short. Right? So there is a lot of flipping. And then this says bull. This says pink, bull. Right? But there's no entry. We'd have to wait for a pullback. Pulls back, it says bear. This says bull. So is this higher time frame say bull? Higher time frame says bull rate. No. Pink. There. Now aggressively long. Yeah, it's kind of probably too late now. That's probably long. See how they stop you out? It's so mean. Now, did this have a warning? Nope. This says long. So you might take one stop, and then you get it right there. And see how you can't trade underneath the purple? There. We've traded underneath the purple. Being a little cautious. Wait for pullbacks. But we're still looking bullish. Right there. Pink bar up, bull. Okay, getting under purple. Uh-oh, purple. Be careful. Purple, 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 bearish. We missed the top. Unless you were watching for divergence, because that one did have divergence. And if you were at location, which it was, you could be aggressive. Other than that, you'd have to wait. Now, if they all flipped together, no, they didn't. The 40 tick didn't flip till here, all the way down here. So now you could be aggressively bearish. So that's a short. That's a short. Oh wait, unless this flipped. Well, that one just stops. It's at location. That's too bad. It's right at the yesterday's point of control. Pink up, but no pink here, so don't do anything. It's short the pullback. No setup. Triangle down. Okay, so there. Triangle down. This is your short. But see how this looked bullish on this time frame, and it just doesn't make sense because this was not bullish, and the higher time frame wasn't bullish either. Right. So there's just no reason to buy any of that. And instead, you just wait for the sell. Right? So if I was trading right now, I'd be bearish only. Unless we can start getting over purple bars, then pause. Then if we got over pink bars on this time frame and this time frame, I could buy pullbacks. And if at the very same time on the 30 tick or the 80 tick, if I got over a pink bar, I'm buying momentum. Now, the only other thing I want to talk about real quick, let me take a quick break, actually. I'm going to go get a drink. I'm going to come back and talk. We're going to look at specific entry signals and how they would have worked. Like, we can think about some of the, like, these are all filtering techniques, ways to, like, keep stops from happening so often. But to do, if you do it this way, like I said, you're going to miss stuff like this, right? You're not going to catch these. And I kind of like these, right? So it is not a bad idea to have in your back pocket, in addition to knowing when to be super aggressive and when to be bullish and when to be bearish on pullbacks. It's also kind of nice to know some setups that work a lot, like almost anywhere, or like which setups to look for at location once you figure out where that location is. So let me take a quick break, and then I will come back and we will review that. So hold on. Be right back.
All right, so like I said, I'll make this section a little bit shorter, at least than the last one. Um, but I just want to go over some newish signals. I gotta put back the live view that I've been noticing that work a lot. Okay, and what's neat about them is that they actually work on most time frames as well. The key with them is the location, basically, like where to look for them is really the important part. So once you learn where to look for these setups, it yeah, it's you can you at least with the algo and the signals that I've added to the algo, they show up not often, but often enough where you could at least get some scalps. So the first one that I'm going to show you is when you get a diamond inside the bar. So on the way down they're red, and on the way up they're white. I was looking for a white one right here. White diamond inside. And that same bar has a dot under it. Okay. If the very next bar goes in the same direction as the one with the diamond in it, so if this would have been an up bar, or when this is a down bar, the close of this is a pretty good momentum trade. It's got to have all those parts. It's got to have a diamond, a dot on the diamond, and then it must produce another bar. It's best when that bar has a triangle on it, but it doesn't have to. I'm finding it doesn't really matter. It just needs to go in the same direction. So this trade is usually good for about one rotation, so about 12 to 20 points on NQ. So like there's one of them, and this is on the 15 tick, right? And then this one didn't quite set up because this one went the wrong direction. The triangle came late. If you wait for the triangle, your win rate decreases, but as long as you don't get the yellow line underneath this low, you can especially when you do get the sweep here, the triangle up can work. But then this one set up twice. See, it tried here, but then we didn't get the triangle. Then it did diamond with a dot followed by another bar up, and that was your entry, right? That's where I saw this first, was this afternoon. I was like, whoa, I've seen that before. I think that might be a repeatable signal, and it is. Another little like hint with this is if you watch the dotted line that I talked about, the developing VPOC, right? The entry bar, the one with the triangle on it, or the one after the diamond, it really should have the yellow line above the dotted line. Otherwise, it's probably going to run into resistance. It might work, but it might not go very far. And so on the way down, you want this bar's VPOC, the yellow line, to be below the dotted line, and it is, because it's bearish. So if you look right there, the yellow line, the yellow dash is underneath the red dotted line, right? That helps a lot. In general, for momentum trades, that's going to be the way you want to see volume developing beyond the VPOC. That's the developing VPOC. That's what you should usually see. Okay, so notice here, diamond, dot, the next bar is not triangle up, right? So no trade. But if you want the lower odds version, you just wait for the next triangle up, and you can get a little scalp, but it's only to resistance, which is usually this high. So that is the lower odds version. The better one is, it's hard to see because there's a blue dot in front of it, but there's actually a white diamond here with a dot. And then the next bar is going up. It works even better if there's an arrow on one of these, with these blue arrows. That works really often, as long as but you must have the triangle up, or the bar that comes after it. So I'm just going to look at so here's another one, diamond, dot, right? They'll often have an X on them too. This one has an arrow, and then it got another bar going in the same direction, so you can long there. Even though this arrow is yellow, which is usually a bearish signal, it's still a good, what it basically is saying is that there was a momentum shift to the downside here, and then the buyers quickly retook it. So this is a trap when it's a yellow arrow like that.
But the X's on the diamond bars are also generally good. But having the dot on it, and as long as it produces another bar, is like, I'm not going to say unbeatable, but very rarely will that stop. So note, when they do stop, they don't have the dot and they don't produce another down bar. It's just a diamond with an X and no dot, and the very next bar goes in the opposite direction. If you know the direction and you see this exact thing, X with a diamond, no dot, and it gets beat, it's this triangle up is actually a pretty good trade. But you have to be going in the direction of the trend, otherwise you can get totally murdered doing that. You have to know the direction. You don't want to be flipping back and forth, but I can point out those two because that's kind of neat. So, okay, so look, diamond, no dot, right? So this extension bar, not so great, right? And not surprisingly, it kind of wiggles around here. Now, where these do work really well is if they do extend like this, if they retest this area and then produce like a star down or a triangle down, that can be a better entry. But you have to wait for the retest if there's no dot on it. So if there's no dot on this bar with the diamond, you need to wait for the retest and then take the scalp. Okay, so that's yet another way to use those diamonds. And I'm going to talk about the other diamonds too, the pink and purple ones. Okay, so look, diamond, no dot, right, produces a triangle down. So if you were bearish, what you need to see happen is for it to go down, come back up, and hold this area, and then roll over, which didn't happen, so there's no trade entry here, right? And if you wanted to, knowing that, if you knew it was bullish here already, seeing this get beat by a triangle up is usually a reason to be bullish. As long as you're bullish in the higher time frame. Okay, I'm kind of going the wrong way here, but that's okay. All right, so look, diamond, no dot, and no triangle up, right? So nothing to do immediately. Your best case scenario is waiting for the triangle up, and then that's a lower odds trade to take than seeing it come right after it. But here it works because what this really, since there's no dot, it's a retest followed by triangle up. That's what that, it's actually the same trade as I mentioned before. But it can work with the dot or without it. You don't actually need the dot for that version. Okay. So diamond, right? No dot. Very next bar is not a triangle. It's bearish. Triangle down is your best trade entry as we beat that. Okay, diamond, X, dot, right? That looks pretty good, but our next bar was not triangle down. Your lower odds entry is waiting for the next triangle down. That gets you short here too. Okay, here is diamond, triangle down, followed by, diamond dot on the bottom, followed by another bar up. This is generally long. And the problem with this is that your target is resistance, which is right here, and that's only like 6 points away. So that would be the reason not to take this. If you wanted to wait for the retest, you could, but it does not produce a triangle up, and therefore you take the next triangle down, which is there. And it's bearish, so if you just want to avoid taking these against the trend, you'll do better. So here's diamond, no dot, so we need a pullback, right? So we get the triangle down, now we need a pullback. We need to hold this general level, which we do, and we need to triangle down. So that would be your entry. And that works. Okay, diamond, no dot, no triangle down, no triangle up. Generally, if it's bearish, it means we can just take the triangle down, right? That's your best case scenario. Just fight it. And here you didn't get very much, and then it stopped you. So that's the most aggressive and least effective way to trade these, is to try to trap them. So this one gets no dot, so you need the retest. Then you do get the triangle up. The dot is actually shifted up here, which is not good. And then it comes back up. It takes out this bar, telling you it's not bullish. So no trade. And that's what's nice about this setup, is that most of the time when you're going the wrong direction, it just won't set up. Diamond, dot, X makes it better. The next bar goes in the same direction. That's your short. Pretty good. Diamond, no dot, you need a pullback. You get the triangle up. This would have worked, but you can't take it. You wait for it to come back. You see if you can hold this level, and it can't. See how they got the VPOC below the low? So there's no trade here. There's no triangle anyway. Technically, you could take the triangle down now that you've trapped it, but that's a little bit fancy. So this one did not have a dot. You have to wait for the pullback. You got the triangle up, so you want to get back into this range. You want it to test, and you want to give triangle up. That's how you catch this. It's not because of this diamond that you take this. It's this diamond that gets you in here, in my opinion. Okay. Diamond, it's hard to see, but it's red inside of there, right? There's no dot, so you need to pull back. So triangle down confirms the level. You'd want to look to the right. Next time it comes back, see if you can get a retest that doesn't get the VPOC behind it. Looks good. Triangle down, good to go. Short. All right, so that's a good one. Diamonds. Okay, red diamond down. Looks bearish, doesn't have a dot, doesn't get a triangle down. Your only choice here is to take the reversal, and you'd only do it if you thought it was bullish, right? On the triangle up. That's your only real trade there. I'm not trying to skip any. If I miss one, I'm just missing it. I'm just not seeing it. Okay. No dot on this triangle. You do get the triangle up. What you want is a retest into that area, and then a triangle up. You get the retest on the green bar. So this triangle up is a buy. So as you can see, this setup works pretty much anywhere. If you want to limit it a little bit, like we haven't seen a lot of stops yet, but the easiest way to limit the stops is to identify location. And an easy way to identify location is if you see these channels, you can use Keltner channels or fib channels or whatever. You want to make sure that one of the bars that like has to do with the setup, like the lowest bar, that it at least tests below or to the low of the bottom of the channel. That will mean that your expectancy to get back to the next resistance is good enough to risk a whole bar. Now that'll change depending on what time frame you're trading on. So, oh, here's another one, by the way. It's hard to see, but there's a diamond behind this dot. It's kind of white a little bit. I should probably make them a little bigger so it's more clear. And then there's a dot followed by triangle up, so that can immediately be taken for a long. And then this one actually retests, right? And then so triangle up is good that way too. So now, if I wanted to take the same exact setup and go to the 24 tick, let me just hide the drawings. What you'll see is it'll work the same, but the stops will obviously be bigger. So look, I'll show you. So we'll do the 24 tick, and I'm going to show you something kind of neat on the 8 tick too. Which, like I said, I don't recommend anybody trade, but it's still interesting. And then I'll show you the pink ones and probably get some sleep. Okay, so white dot, next bar is up, right? Technically it's bullish, but if you look here, we've extended a lot in a straight direction, so in one direction. So it might be, and then you're probably going into a location. I don't know, but one or another, it's technically bullish here. You do get your 10 points. It's just, yeah. And then we get rid of the volume profiles too. Okay, so we'll just go left to right. They don't set, obviously the higher the time frame, the less you're going to see them. Okay, dot with the diamond. This triangle down is usually a good short. This one stops, so there's a stop. Now this one, you were trading against the trend, which is generally not a good idea for this setup. This is not the kind of trade that you want to take against the trend, and you could easily filter that out. All right, so here, no dot on this diamond, right? You need to pull back into that area, and then a triangle down, right there. Now, in this case, we did not get VPOC above it on a bull bar, so that's your entry. And it stops. Again, a counter trend, right? Not surprising. Okay, this one with the trend, dot, it's got the diamond. The next bar did not go higher, so there's not any immediate entry. Your only choice is to wait for the next triangle up, and it's a little bit lower odds, but it does work with the trend. Not surprised. If you look, this one did not reach the bottom of the channel. So if you wanted to filter one out, that one would be the more aggressive trade that you'd filter out. It unfortunately, if you were trading counter trend, if you're trading both directions, you would filter out the good one there. Whereas if you were trading only in the direction of the trend, you would like just not have any trades, right? This one in the direction of the trend, but notice we're not at the back of the channel, but technically that is your entry. and you do get 10 points. You just have to realize that you're like at the high of day, you know. So then you get this one. There's no dot. Plus it's counter trend. You need to retest into that area. You're not going to get it. Or if you do, it comes much later. We'll mark it off in case it comes later. Because it's still valid as long as it's the first test back. Okay. Even if it's set up again since then. Okay, diamond, no dot. You need a pullback here. And then you need a triangle down right there. This one, dot, diamond, next bar is down. So one way or another, that's your entry. Note here you did not reach the top of the channel. So this one is aggressive. But it works. Okay, dot, diamond, no follow through. Also counter trend. Only choice, trade, triangle up. Right there. And that fails because it's counter trend and it's probably not a good idea. Triangle up after diamond, but no dot. You need a pull back. Pull back. That has to hold. I mean, triangle up. That's your entry. You get a little 10-point scalp. Okay, diamond, dot, triangle up. That's your entry. And it works. Note the difference here between that one, getting underneath the channel low versus the counter. Well, this one was underneath the channel low, but it was counter trend. Oh, and that was lower odds because it was a late one. But this one did not reach it, and that one still worked. I guess as long as you go with the trend, they're working. Okay, so this one you need a pullback because there's no dot. And that pullback cannot put the yellow line below the low on a bearish bar. Nope, it did not, so we're good. So that's your entry, triangle up. You're targeting resistance. It's a little tight, but it works. Okay, this is counter trend. You probably shouldn't take it, but if it pulls back and gives you triangle down, you technically could. It does not set up. Your other choice here is just to take the trap, triangle up. But again, it did not set up at the bottom of the channel, so that's taking the aggressive trade there probably doesn't make a lot of sense. This one, no dot, no follow through. Your only choice is to fight it, and that works. So when they do not get the immediate follow through, and notice for the short, this is perfect because it's above it's above the channel. So if you're going to fight the trend, it's better to do it this way. And then remember what we talked about before, where I've gotten behind. So this red outline, I've gotten behind him a little bit by a tick or two, and then closed lower and created a triangle down. That alone can create a test of support, which is here. Okay, so as long as I know that this is where I'm targeting, and then you have to reanalyze there, you can do it that way. But with the short, sometimes you don't get the retest, so you sometimes can't wait for it, or you just don't trade short. Okay, so there's diamond, but no dot. You need a pullback. This pullback occurred on a wick, pretty tricky. Right here is the pullback, so the entry is here. Again, it tested the back of the channel, so this is a pretty good entry, even though it looks. Oh, that's right now. Even though this looks awfully low to enter, the test above the channel makes it a relatively safe trade. Okay, so now let me show you something cool on this so that's the 24 tick, right? It was about 50-50 if you took it both directions, and probably about 60 or 70 if you only took it with the trend, right? Okay, now take a look at this. So this is the 8 tick. Now it's not going to be the what's it called? The win rate is not going to be the same anywhere near that, but I want to show you how it actually sets up the same. Let's go back to today when it opened. It just, you have to be really careful about your direction. So look, if you felt inclined, let's go after the 9 o'clock. I think there was, we at least want to wait 5 minutes after the what's it called? econ comes out. So we'll do like 10 minutes. Okay, so let's look for them here. White diamonds and red diamonds. Okay, white diamond, no dot. We need to pull back to get long, and we need to see a triangle up, and it doesn't happen. Nothing to do, right? You could try to short it here because it was bearish, so you could trap it with triangle down, and that works. With the trend, they will still work. Okay, is it bearish? Yes. Dot, diamond. You need a triangle down or at least a down bar. You don't get it. So your best case scenario is either taking triangle up if you think it's bullish, or wait for the next triangle down, and then it's kind of iffy, right? So this is your bullish entry, and it does not set up bearish, and the bullish entry works. Okay, there's another one. No follow through. Your only choice is buying triangle up, which is right there, and that works. Nicely. And the good news about these is it's so specific that you don't see it set up too often. For the diamonds to develop, you need to have speed and volume coincide, and it's harder to get that on this tiny time frame. Okay, and that's what I was surprised to see. Diamond, dot, no immediate entry, right? So triangle down later is an okay entry as long as you think it's bearish. It's right there, and that one works 100% so far. As long as you do the direction. No diamond. Yeah, you're just not going to see very many of them, thankfully. Oh, there's one. Diamond. Next bar is not triangle down, right? So the only choice is to take it up because there's no dot. So triangle up would get us long, and it does not set up. Even though it looked bullish, it didn't set up, and then it rolls down, right? So just seeing it not set up should kind of tell us, like, why can't we produce a triangle up after a diamond? Maybe it's not so bullish. Okay, diamond, triangle up. There's no dot. We need to pull back to buy it. Pull back. It needs to bounce before the low. The VPOC on a bearish bar cannot be lower than that. Oh, it just made it. So that's a long. Oh, I didn't see this one. Dot, diamond, triangle down. That's your short. This is your long from this one. Those both work 100%. It's not going to say 100%, but I'm telling you, if you just know the direction, it's great. And we figured out that how to know direction before. So diamond, no dot. You need to pull back right there. Pull back into this range with a wick. Next triangle up. Good to go to resistance. That one works. Now, what's really cool about this is that your entry here, even though it's 2 bars, your entry here is like 85.50, and your stop is 78.50, right? So it's not a big stop. Okay, that comes right back in this area, and then you get diamond, triangle up. You technically need a pullback, but because it's at location, I might make an exception here. But if you get a pullback and a bounce, no. Oh, purple bars. So this is probably okay if we get triangle up there. So only purple bars got underneath them. We're at location. This is probably good to go. Yeah. Oh, we got another one. No dot. So we'd have to wait for retest. No triangle down. Did this one get a VPOC above it on a bullish bar? Nope. So that's an entry short. Yep. So let's say we took the 12, 11 point stop risk. I mean, you're in 85, let's say, and stop 94, let's say. I mean, that's not even 10 points. And then your MFE on that one trade, $85 to $65. It's at least 20 points. It looks like a lot more than that, but this is a very small time frame. But still, 2 to 1, right? And you can take a pretty big size. So, like I said, I haven't been trading the 8-tick, but when I notice how rarely these show up and how they work exactly the same, I'm like, whoa, wait, this actually works. Diamond, no dot. We need to pull back. It happens right there. See how you don't take this triangle? You wait for the pullback And then take this triangle down. Your stop goes behind the actual diamond bar. Okay, that one might have stopped by a tick or two. You'd have to go behind this. We can call that a stop. It just pulled back twice. Like, if you thought this was the pullback, you got short here. If you thought this was the pullback, you got short here. It's just depends on how you read it. But we'll call it stop. I don't think I missed any more. Diamond, no triangle. So your only choice is triangle up to long with a stop behind the green bar. And that one stops. Even though it looks like it was in. Remember, that's a very aggressive trade, momentum trade, and you're not getting it at location. So it's an easy one to filter out, but it stops. Okay, diamond goes up. We need a pullback into that range right there, and now we need triangle up. And it just doesn't set up. If you wanted to take the triangle down for a trap because you thought this looked bearish, you could. Now that might have stopped. That's the second time that didn't work. And look, you did not get above the channel. So again, probably could have filtered out that aggressive one there. But that's at least 3 stops and like 6 or 7 2-to-1 wins. Okay, diamond gets immediately lower. You need to pull back into that area and then a triangle down. I don't think this quite reached, so this wouldn't count. I don't think that one's set up. Diamond immediately lifts. This looks counter trend, but technically that's your long. And it works. Diamond dot triangle up, that's a long. And it works. So see here, it kind of looked counter trend. So you had purple bear. Right? And on the, I bet you on the 15 and 24, these were also bear. Nope. Pink, bullish. Pink, bullish. So, oh, but that wasn't until later. It was, the original entry is here. Oh, no, you had that. Pink, bull. So on both of the higher time frame, you were bullish. Even though this looked on the smaller 8 tick, it looked kind of bearish. On the higher time frame, you were bullish. So you were looking for these triangle up. You knew you expect that these triangle downs get trapped. And that's exactly how that's supposed to work. Diamond, no follow through. Your only choice is triangle up for a reversal. But again, it's not in the right location. This one is in the right location. You need a pullback, you need a triangle up, and you don't get it, right? This one's at location. No follow through. Your only choice is to short the triangle down. That one works. Now let's see. Did we switch to bearish on the higher time frame? Because it kind of looks like we might have. Yep. Happened right here on the 15. Oh, the 24 does not switch to bearish. What about, is the higher time frames bearish? No. No. So it would be pretty hard to catch that. What about the 80 tick? The 80 tick is bearish. So it should be, you should be more willing to flex a little bit to the bear side since the biggest time frame is bearish. But really, you might want to do at least wait until this point where the one right above you is bearish. So that would mean you might miss this short, but you'd probably catch this one. And that's the one that looks like it matters. Look at that. So that's pretty neat. So anyway, that just keeps working like that. So, all right, I'll do 1 or 2 more things. One thing I found, and this works really nicely on the 15 tick, but also on the 24 tick. The little arrows, sideways arrows. I haven't talked about those a whole lot lately, but when they show up at the apex, right, primarily when you get follow through, just like we did just like we looked at with the diamonds, where it's bar and then the very next bar goes in the same direction, right? Those arrows, when it's moving, are usually going to be pretty good support and resistance. For instance, Let me find some. Here, we'll do today again. The whole, okay, so 9, 0, 5, 9, 10. All right, so let me find the arrow. So here, this one. It's at an apex. We wouldn't know that's there at the time, but it produces another bar going up, right? And it was after a drop, all right? So this bar here, that range, is important, okay? Then this one, same thing, right? We had to move down. We got an apex eventually. It's got an arrow, and the very next bar goes higher. That location becomes important. If you want to be even more specific, what you can look for is the bar with the most volume, either that bar or the ones that it engulfs. So this one, or this one, or this one, or this one. Wherever most of the volume was, you can basically put a line there. Okay, so I can like just draw the volume profile of these two, and it tells me that that's where most of the volume was, right? So I can put it on this VPOC because it's not up here. So I'll say it's the lower one. And then this one, yeah, it's definitely the VPOC before it. Usually, it's the bar before it. The bar at the end, because the reason that's the case is the arrow is telling me that there's been a big momentum shift, and that usually occurs because people get trapped, and then they know they're trapped. They're also very, very common on the green bars, the bars with the green inside, because those bars mean that volume shifted higher after falling. So volume fell and then shifted up suddenly. So for that to happen, usually you need some momentum, and you also often need volume. So they'll often have a pink, diamond on top of them. So the bar before it, which is actually the one that matters a little bit more because that's where the trapped sellers are, the VPOC of that bar, if we trade beyond it, or we give it up, but then we recapture it, or what I call reclaim that level, you can have big squeezes happen. So for instance, here, we put in big volume down, arrow up, continuation, then they swept that liquidity, right? If the buyers can retake this VPOC, particularly if they can get a VPOC above it on a bar that's not pink like that, the chance for a big squeeze, it increases a lot. So right there, and then plus, see where this dotted line used to be? That's the only resistance that we have now. So you might need a pullback, but the chances are you can break and push to resistance. Now, if we can't get volume above this, it's going to roll. See that? See how this level becomes really important here? We can't get VPOC above it on a bullish bar, and they eventually roll it over. But this move could have been anticipated if you saw this arrow and saw that you took liquidity and reclaimed it with VPOC. You could actually catch that scalp. I know there's no indicator here, but the level is what was important, and getting VPOC above that level makes this little squeeze possible, right? So what's interesting, what I found, is that if you find that on one time frame, on the smaller time frame, you're probably going to get a sign of aggression like a star, an X, or a dot, or a diamond, and then probably going to get a triangle up after that, and that is usually a fairly good entry. That triangle up on the smaller time frame after that reclaim. See that? It's the same place. But here, I'll show you. So you can do the exact same thing with the 24 tick. You just have to find one. It'll be at an apex, but you wouldn't know it's an apex when it's live. But we want it to be arrow and then a bar going in the same direction, and the bar before the arrow to be the other direction. See, here, the problem is this one is a bearish arrow on an up bar, so it doesn't work quite the same. It basically can immediately act as a trapdoor if you get underneath the bar behind it. So that one can be a little bit more like abrupt. It doesn't always like go higher than roll over. So we're just going to ignore those for now. Okay, here we go. Bearish arrow on a bearish bar that has an apex, followed by a triangle down or something, or some kind of continuation. So this bar behind it is where all the buyers got trapped, and most of them did business right there. So the rule is we need to go above that. We need to sweep above it, and then we need to roll over and have bears reclaim that level. So we sweep above it. We get a VPOC above it that's not pink. That's really critical. If you want this move to be big, you need to actually sweep back here. Now we need to retake this with VPOC. Well, VPOC's way up here, so it's not retaken yet. VPOC's way up here. It's not retaken yet. There. VPOC has fallen down, but it's a purple bar. Technically, we want a bar that's not purple. Still purple. This one might not work out so well for an entry on this time frame. You probably could have found, I'll show you, but what you do with this. But here's where you know for sure it's bearish, which is awfully late, right? And if I had to guess, we probably do not have a chance to sell here. Yeah, they just fall away. So could you just sell this? You could, but I think the better way to do this is just like I showed you before, where once you see it happen, it's like, oh, we had a level here. We swept above it, and now they're falling down. All I need to do is on a smaller time frame, I need to see some sort of a sign of aggression, right? And so you knew that it was falling down here, right? But it's purple. So this one at that same time had a dot, and then any triangle, any star, any dot, any diamond. Once you've gotten this one that's bearish, that's not purple, they're all good. This is still fine. This is still okay. Now it's blue now. Now you got to be careful. They're blue. I mean, it's a little overextended. This is better. This is okay. The blue makes me nervous, but it's technically still okay. And that one stops. And it was purple. It wasn't great. You'd have this blue. It retraced it. Sometimes you'll continue lower. But this triangle being blue is a problem for sellers, because this star got swept, and then they're going to reclaim this high, and that's going to squeeze higher. There's the retest. Higher. Okay. So, like I said, on this time frame over here, 24 tick, it looked suspicious whether or not we want to be bearish. On the smaller time frame, it was clear as day that they're breaking underneath this. They've put into some aggression. And if you wanted to, you could go all the way to the bottom, the 8 tick, and you'd see even more evidence that there's aggressive traders trading in there. It's just that you needed to see that to get these little wiggles and stuff and the volume shifts. You need to see them. You need to get more zoomed in, because it's not very liquid. It's not very volatile. So, yeah. Now, that also means that if you can find these arrows on the 24 tick, I'll go on Monday since we already looked at this, you can then go down to the 24 tick and the 15 tick and find entries. So let's just... Okay, so here's one. So see how this arrow is followed up with a triangle up, and the one before it is a bear bar. Now in this case, yep, our volume is still there. So all the volume is in the bar behind it. We need to give it up to sweep underneath it, and then we need to reclaim it, right? The reclaim occurs here. Test, close above, that's your entry. Otherwise, wait for the retest of that volume, and then get triangle up or star, right? And it's usually a squeeze on that time frame, big squeeze, right? Good, it's a good trade. So the problem is the first one was pink, right? So if you wanted to know, can I just buy this? What I would need to see is at that same spot, which is up here, did we have an aggressive trader? We did. So we had dot, diamond, followed by triangle up. We already talked about that entry just today. It's a known entry. You can immediately buy it, and it shoots, right? On the smaller time frame, 15 tick, same exact spot is up here. Right there is where it triggers with the pink bar on the 40 tick. That's obviously not an entry, bullish. Okay, so we have an apex, trap behind, triangle up. You can buy that, right? Apex trap, very classic entry. If you didn't take that, you got the dot, right? If you didn't take that, you got the star. No triangle up there. Looks like that's it. Star, that might be triangle up. There we go. That should be good. Stop goes down here. If you want, you can wait for this after the pullback. And all those start to work, right? Because you know on the 40 tick, you should be looking at a squeeze, right? Whereas here, if you could probably take it here or here. You can take the apex trap. All of those are fine, right? All those entries are good because you're zoomed in enough that those will work, right? Whereas if you waited for an apex trap on the 40 tick, it's probably too late. If you wait for this to get tested below, you've missed it. This, if you wait for this to get tested below, you miss it, right? You'd look for it here and it's too late. You get a tiny little move and then a rollover. So you got to be able to zoom in to the right time frame. And like I said, when it's this slow, you can do that. But I just think it's cool that it really does work on every time frame. So it's just that it depends how much of a swing you want to get out of it, right? If you're looking for a 50 to 100 point swing, you better find the setup on this time frame. Now, notice here, for instance, you got the arrow that's bullish on a bear bar, right? So I don't know whether or not this level is really all that important, but this one clearly was on a bull bar that's an apex followed by a triangle up. So I know for sure that if we can come back into here and trap under that and then reclaim it, the one before the arrow, right? Where everybody got stuck selling. And then we can reclaim it. It's got to get VPOC below it. So here, VPOC tested it. That's not enough. We've got a purple bar under it. That's still not enough. If we still can't get under it after testing it over and over again, it's probably just not bearish, right? But the big squeeze, it might not squeeze though. It might just kind of chop around. There's really nothing to do, but you certainly don't want to short. But if it gets underneath it, retests it, and rejects, that's usually bearish. Whereas if it gets underneath it, reclaims it, well, now it's going to squeeze. So if I looked at this and I was like, this looks pretty bearish, the first thing I might want to do is say, well, where were shorts trapped? Well, they were trapped right here for a moment, right? If they test below that, reclaim it, it's going to squeeze higher. So having that level on my chart might be helpful. But remember, you can't just go like this and say, if we get back to that level, I'm gonna buy it on this star because you'll get crushed. It's got to actually activate. It's got to get under it. It's got to go over it, and it's got to close bullish on a bar that's not pink above it on the time frame you found the setup. Okay, and then the only other thing I have to talk about is the diamonds. So I'll try to make it fast because it's getting really long. The pink and purple diamonds. Oh, I can't. I know. It's like, yeah, I know. So the pink and purple diamonds are outside of the bars. Here is the bearish version, and here is the bullish version. This is basically telling me that on that bar, there was more volume than I would expect, like given its nature. Whatever it's doing, it's doing it with more volume than I would really have expected. So you don't just trade it because there's volume, but what you can do is you can we know how the market responds to high volume areas, and we can kind of think about this range, especially the VPOC of it,
as a high volume area on a smaller time frame. So this bar right here constitutes everything between 1725 and like 32, right? So from here all the way down to like here, that produced this high volume bar, right? So this on this smaller time frame, that is the bar, and so I know most of the volume that occurred there was near the highs here at like 29, right? So most, and then you see the dotted line on the developing VPOC on the smaller time frame is right there, and that should make sense, right? Because during that time, that's where most of the volume was, as that bigger bar here was developing. Most of the volume was up there, right? That should make sense. So what I can do is I can use that information to say, okay, if it's bearish, what do I expect to happen? Well, if it's bearish, that high volume area is going to act as resistance on the next test back in. Like, so here's the bar getting formed, right? And here is the test back in. Now, is it going to act like a brick wall? No. But what we might see is a test without getting volume above it, and then a triangle down. So test gets price above it, but not volume above the high. Then we have diamond, triangle down. Now, we know that that alone without a dot is not a reliable entry, right? Really, we want another retest there. So if we want to be pure, you'd want to wait for the retest here. But technically, this move here was the retest on a higher time frame, right? So a lot of times you won't get more than this little wick, and then it'll be over. See? So if I already knew on the higher time frame that I had this pink diamond, all I need to do is mark that area, right, from basically the high to the VPOC or so, wherever most of the volume is, right? It might be a little bit further than that, maybe like here. And I can just say, hey, if I can get up there with price, but I can't get up there with volume, and then it produces a sell signal, like a triangle down or a dot on a smaller time frame or a star on a smaller time frame, I can probably short that, right? And thankfully, it got above the channel, so the location's right. It got at the top of this low volume node, so higher time frame location's right. All of those things align, and it can be a setup in and of itself, right? So let me just go back and I'll show you another one. Let's do one on the other side. So here's a pink one, right? Bull bar with a lot of volume. All right, here. I know most of the volume happened in that bar somewhere in there, right? Anybody who's trapped short from that bar forming did most of their business down there in the wick, right? So now if I go to the smaller time frame and I look at what that looked like, I can see that when it came down here on these purple bars, there was one bar that wasn't purple where everybody started to fight. It wasn't just buyers giving up. It was like there were lots of shorts and lots of buyers getting involved here, and then they pushed a little bit lower than that and then closed higher with a ring and a star, and then behind it is the diamond again on even this time frame. So I could even look at this at a smaller time frame because this one also had a diamond. So I could say, well, that one on this tiny time frame constitutes this to this. So on this tiny little time frame, getting a pullback into where all the volume is, which is again the dotted line on that time frame, and then holding there without putting VPOC below the low here, and bouncing with a trade signal is probably good to go. So we pull back to it. You can see that the low here, we put a bar below it with price, but the bear bar here had the VPOC way up there, which is above, just barely, that low.
So they were unable to put any volume down here until the very end when everybody bought with volume. See that? So it's like big volume, pull back into the level, everybody responds with volume, and you get triangle up plus bar. And if you look here, this was a lower low, but price decreased. So even though price was dropping further and bears were getting more like further to the downside, they put in less effort there, meaning that they're susceptible to getting trapped, right? And so this was the high volume bar on the higher time frame. On the lower time frame, this is the retest, and that's the entry. And off it goes, right? On this time frame, we have bar with the volume, right? This is the bar the volume from the 24 tick. It pulled back. It tested below the level, but couldn't get VPOC below it. Gave us arrow, green bar, triangle up. Good to go. So on both of the time frames that are smaller, it's the same entries as we've been talking about. You know, it's still the same thing. And then if you weren't sure because everything else was bearish on the higher time frame, which is true, you had purple bar followed by a bear bar, and on the higher time frame, you didn't yet get a bull bar above any of these pink bars. So it's like, but look, the bearish bars can't produce any the purple bars can't produce any bear bars underneath it. So it's basically like a stalemate on the higher time frame, right? So a lot of times that will mean that the reversals here might be pretty explosive. Like the low may be coming in, but what do we need to see for if we're looking for the low? What we need to see is we need to see a green bar, a ring bar, or a star bar get traded below. We need to see them, right? They need to get liquidity stopped out. We need to see a high get broken above it with volume. Now this one didn't do it. We got a high above it, but volume did not get above it. So now we would actually need to break that dot right there. So now we would know for sure it's bullish, right, on this time frame. And just then, oh, maybe not. So you'd have to get a pullback here. You didn't get it. So if you weren't willing to go to the smaller time frame and look for the low, there wasn't a great way to get long unless you were willing to be until you were willing to be aggressive. And at that point I've decided is usually when you've got at least a couple time frames adding up to the aligning, which we don't have here, which we talked about earlier in the same video. And so here we broke above this. We've broken above this with volume. Everything's good. We just need an entry signal. So we'd wait right there. Right? Purple bar, star, followed by triangle up. So on this time frame, you wouldn't get this triangle like you would on the smaller time frame. You'd have to wait until 87, but then you'd be home free. Right? And then eventually, if you miss that, like I said before, we looked at this same exact spot a couple times. Eventually, you get bull on the 40. And at that point, you can actually get more aggressive. So now I can take this trade. I can take this one. I can take this one. I can take, oh, that one would have stopped. But you can usually be a little bit more aggressive. And then in the 80 tick, it was still bearish. So yeah, you don't want to be too aggressive into resistance. So yeah, but that's pretty much everything. Hopefully that's been helpful. Let's just take a look and see what's going on here. So we had a high volume bar here on the 15 tick, right? So you could look at the smaller time frame and say, okay, this is our area to watch. Here's where all the volume is. Let's see if we can get a pullback and it to hold. And it does. And we get triangle up. So on the 8 tick, it said go ahead and buy right here at 59.50. Okay, that's what the 8 tick would say, based on the 15 tick having a high volume bar, and getting a pullback that gets held. On the 8 tick, that would say go ahead and take it at 59.50. On the 15 tick, you'd have to technically get a star stopped out, and then get over a high, which has not happened yet, right? Then get a pullback and go. Otherwise, you'd need to see that everybody was aligned, which we're not because the 24 tick is bearish. And this is bullish, actually. So you might be able to be a little more aggressive. What you really want to see is buyers to have some success here. But the fact that the 8 tick already set up suggests that this may be the low, especially since the 30 tick is actually bullish. Now, the sneaky thing is they had purple bar, bear bar, so this guy probably gets trapped, right? So if you wanted, it's not too late to just to buy it, but what we really want to see is for this to break and then pull back into the VPOC and hold. That would be ideal if you don't want to trade the 8 tick. And I wouldn't blame anybody for not wanting to trade the 8 tick, but it does look like for the moment it may be bullish. It's just not confirmed yet. Whereas here, you don't, the closest high is way up here. You're probably not going to break that on your first try. You might, but you need some momentum. Actually, you would have it because once you got it, you'd have the 30 tick, 24 tick, 15 tick, and 8 tick all together. So maybe it does just break right through that. But what I'd love is for it to peak out here, pull back, hold, and then break over it, because then that would give you a confirmation that everything's bullish. What would be best would be getting a pink bar followed by a bull bar here, because that would give you immediate rights to buy any star, any diamond, any dot, etc. So that is the process that I'm using for now, at least until we see some aggression come into the market that creates some volatility. As long as we have low volatility, I'm going to be more cautious and either trade the very small time frame for very small amounts, just trying to scalp 6 to 10 points with 10-point stops, and only hold runners if I have situations like this where the higher time frame agrees. And otherwise, I'm just going to be very, very conservative and wait for confirmation. And if I want to trade momentum, I need to see a breakout of a new high whenever all the time frames, or at least the time frame I'm looking at and 2 time frames above me, are aligned. And that way it should filter out a lot of these wiggly stops. Like if you buy this saying, well, I already had a triangle up and a pullback, and I've got a diamond here, so I'm just going to buy right here. It could still come back, stop this out by a tick, and run. I've seen it over and over and over again because it's just, there's no pressure to get the market moving. So they will trap more than just once on many occasions. So don't be surprised, especially if the time frames that are higher than what you're looking at are not aligned. Do not be surprised to see even the second mouse get stopped out and the third mouse get the cheese. It's not that uncommon. And yet the key is not to get frustrated, but just to dial back the aggression until you have clear evidence that not only have you already stopped someone out, but you've also got multiple time frames aligned saying that sellers are trapped on the higher time frame, and you have a target entry signal of an aggressive trader on a smaller time frame. Those are going to be the only opportunities to really get aggressive. And then, if I want to bottom fish, I need to make sure that I have something like this where at least I'd want to see the 15 tick setup and the 18 tick setup. So if I do want to be aggressive, I'd want to be doing it only at spots at location when I have more than one time frame telling me the same thing. But like I said, the win rate is going to explode higher if I just wait for those higher odds opportunities when all of the time frames are aligned. And then if I want, I can probably trade bigger size at those points, because I'm using these smaller time frames to keep my stops pretty small. And if I'm not aggressively hunting lows and highs, I'm going to take a lot less stops, which means I won't be under pressure to perform, which is a big part of why this choppy, slow price action is so hard. Is it feels like you're sitting there all day waiting for your trade, and eventually, your conditions for what you're willing to take, as it gets closer to the bell, realizing that you might not be able to make back the 2 stops you took earlier, you're willing to take more trades just with the hope that you might get even. That's not the way to approach this. Instead, I need to focus on my first trade being the best possible setup, and then once I've had a winning trade that I can take with decent size, I need to basically just be as conservative as I need to be to hold on to that, and then if it happens to set up again, I could take it. But yeah, having that, doing whatever I can to prevent being in the situation that I was this morning, where I take 2 stops in a row and I know that the next stop takes me out of the day. Like doing whatever I can to make it so that rather, I can't, if I know that I'm taking 2 stops in a row on a regular basis, I know I need to know that something's changed, and I can't keep pushing and pressing, especially with size, in the spots that are iffy, like this, right? Like, because this works a lot with just the star, as long as there's enough liquidity. But when there's not a lot of liquidity, you miss that triangle, and it's the difference between the market lifting 30 points and dropping to sweep under here again and collect your stop before it then gives you the triangle up. So just being okay, being comfortable and accepting about the fact that even though this looks like a great setup that I might have been waiting for a while, if the whole thing doesn't align and it doesn't set up just the way it needs to, then I just need to leave it alone. Now here we got diamond, dot, triangle down. So that's technically a short. So if I was long, I'd certainly want to be out of the trade at this point, because it appears that it's going to go lower. And if you wanted to short, you technically could. It's just pretty aggressive. So anyway, that's this. That's the end of this journal. I will probably do another one next week, hopefully with some better results than today. So I will see you all next time. Thanks for watching. And again, if you want to get a hold of me, it's at RedBenTrader on Twitter. And then to request a 5-day free pass to get into the paid trading room that I trade in, contact my coach Simon, trade the letter N, word perform, at gmail.com. Tell him you saw my video and that I promised you a 5-day free pass, and he will oblige. I'll see y'all next time. Thanks for watching. Thanks, guys.